Good morning, ladies and gentlemen. We'll be starting in 5 minutes. I'd like to kindly ask everybody to take their seats. We'll be able to start in the next 5 minutes. Thank you very much. Good morning, ladies and gentlemen. Can we kindly be upstanding for the national anthem of the Republic of Uganda, the East African anthem, and the Afrieximbank anthem? Please take your seats. Ladies and gentlemen, our guest of honor, the Deputy Governor of the Bank of Uganda, Dr. Michael Atingego, distinguished guests from all over the world, President of Afrieximbank, Professor Benedict Torama, Executive Vice President Mrs. Kanayo, delegates, ladies and gentlemen, welcome to Uganda. Apoyo Wonobino, Sani Bonani, c'est un grand plaisir de vous recevoir ici en Uganda. Soyez tous le bienvenu. Welcome to this year's Trade Finance Seminar. I'd like to welcome you to the Pearl of Africa. Uganda is an amazing place. You know, in the next couple of days, Uganda is going to be celebrating 60 years of independence. You can clap for that. But we're not just celebrating 60 years of independence, we're celebrating the beauty, the culture, the heritage. We've got dozens of unbelievable national parks. Case in point is Queen Elizabeth National Park, where we have tree-climbing lions. So if you have, by any chance, any needs to run away from them, please don't climb trees because they will get you. But above also, I'd like to celebrate the people in Uganda. The people in Uganda are extremely warm and extremely welcoming. I was hoping that you'd wait for me to introduce myself so you add me to the clapping too. But since you clapped precociously, let me introduce myself, ladies and gentlemen. My name is Dr. Ronnie Mitch Egwang. I'll be your master of ceremony. My mother always told me that it's impolite to speak to strangers. So it's important for me to tell you a little bit about my story. We as Africans, we love telling stories. And where I come from is not even from Uganda. Our history dates many generations back in a place called Bahr el Ghazal, somewhere in South Sudan. And we migrated, dropped a couple of people here in Uganda. Then we proceeded and dropped others in Kenya. So we come from what they call the Luo population. And as Luos, we're very proud to be the only tribe in Africa who can claim that we've ever had a president in the of the United States in the White House. So you can clap for us also there. Because Obama happens to be one of our distant relatives. So, but again also, I think it's very important that we note that the doctor in front of my name is not a medical doctor, nor is it a doctor of philosophy. So, number one, I can't save your life, and number two, I don't like reading books. I happen to be a veterinary doctor, so the only way I can help you is if you bark like a dog. But since we're on the subject of health, at Afrieximbank, we are very cognizant that we've just come out of a global pandemic, and there still is an evident threat from COVID. We've had a couple of cases of Ebola, and we like to ask that as Africans, I know we're warm and welcoming, and you'd like to hug and shake hands, but we'd like to kindly ask you that you desist from that. When you have the opportunity, kindly sanitize your hands, and please wash every time you do touch surfaces, and if you can, wear a mask when you need to. So, the reason why we're here, actually, is an amazing reason. And as Afrieximbank, over the last couple of years, we've been providing this platform to enable all of us to be able to engage, to be able to share ideas, to be able to learn. And above all, how can we leverage as Africans who are in the banking sector, in trade, to be able to take advantage of Africa as a single market? So for the next 3 days, I think it's going to be a wonderful opportunity for each of us to be able to share and to learn together. So how we're going to do this, ladies and gentlemen, I'd like to introduce somebody whose background He's got a very sweet story. In fact, his story is a lot sweeter than mine in the actual sense. He used to work for a sugar corporation close to over 25, 30 years ago, got into manufacturing, and one day in his MBA class, somebody said, hey, why don't you get into banking? You've got the right head on your shoulders, and you seem to know what you're doing. Lo and behold, he got into banking, and now he's got a story which spans over 2 decades. Ladies and gentlemen, please welcome the chair for the opening ceremony, who happens to be the executive director of the Uganda Bankers Association. Please welcome Mr. Wilbrod Owor.
Thank you very much, Dr. Mitch Ogwang. You have a very rich background. I think it's richer than mine, given that Luo history. But let me focus on the business of the day. First, with the protocols, the Honorable Minister for Finance, who will be represented by the Director of Economic Affairs, the Deputy Governor, Dr. Michael Atingi-Ego, the President of Afrieximbank, and your entire delegation. And it was a pleasure seeing many colleagues in the industry who are the group officers. You are most warmly welcome. Our different distinguished guests, globally, regionally, and domestically here back home, member CEOs, distinguished guests, ladies and gentlemen. I think if there is anything big happening, it is this one, because of what we're just going to go through. For the experience that Mitch talked about, COVID brought a lot of lessons. Most important among all is being able to trade across the region when the other parts of the world were not easily accessible. Of recent, Mr. President, there's been a joke. Any problem, you say, because there's a war in Ukraine, we don't have this, we don't have that. We even had a problem of passports in the country recently because of a war in Ukraine. But you can see that perhaps if we traded a lot more regionally, I think we could be doing a lot more. And so Afriexim's entry in Uganda, I think we are very honored that we have the regional office in Uganda. And I think for all the other member CEOs and financial institutions, I remember in July when we had a bankers conference, we talked about leveraging the balance sheet of various institutions to open up trade opportunities. And this is exactly what we are for this morning, this week, just to leverage and open up the cross-border opportunities and the various payment platforms. But I won't go into detail. As chair of this opening session, we will have a few speeches or remarks to take us through, and a couple of other events as we launch the academy this morning. So without further ado, we will ask the chair of UBA, Madam Sarah Arapta, to come and make her remarks, and after that, we'll have the Executive Vice President, Mrs. Kanayo Awani, and the DG to address us as well. So that's how the first part of the opening session will proceed, and then we'll have subsequent ceremonies. So at this juncture, let me invite Madam Sarah Arapta, Chair of Uganda Bankers Association, to address us. Let's show her some love. Put our hands together. Madam Sarah.
Thank you, Wilbrod. The Minister of Finance, Planning, Economic Development, represented by the Director of Economic Affairs, the Deputy Governor, Bank of Uganda, Dr. Michael Atingi-Ego, the President Chairman of the Board, Afrieximbank, Professor Benedict Orama, and the entire management team and staff of Afrieximbank, UBA member CEOs and staff of financial institutions, all representatives, government ministries, departments, agencies present, private sector players present, distinguished guests present here, including the online audience, delegates, ladies and gentlemen, good morning to you all. My name is Sarah Arapta. I am the CEO of Citibank in Uganda and also the chair of Uganda Bankers Association. On behalf of the Uganda Bankers Association, I welcome you all to the Afrieximbank Trade Finance Seminar 2022. Welcome to the Pearl of Africa. A brief about Uganda Bankers Association. UBA is the umbrella body for financial institutions supervised and licensed by Bank of Uganda. Our membership comprises of 36 members made up of 24 Tier 1 commercial banks, 9 Tier 2 and 3 MDIs and MFIs, and 3 development banks, namely East Africa Development Bank, Uganda Development Bank, and our newest member, Afrieximbank, that was admitted in July this year. Congratulations, and we're honored to have you, Afrieximbank, join us. Our mission is to promote a sound banking environment through research, innovation, advocacy, good governance, and best practices. To achieve this, we undertake the following as part of our initiatives: research and high-quality policy dialogue on banking and financial sector matters, including trends, key issues, drivers impacting or influencing the industry, and national development thereof, in collaboration with other agencies, local, regional, international, including the academia. We work very closely with the regulator, the Central Bank of Uganda, and non-bank financial institutions and organizations in promoting financial sector growth through training, thought leadership, and other capacity building initiatives. We leverage on our stakeholder engagements to advocate for policy changes at industry and national level. Today, at this ATFS 2022 seminar, it therefore fits very well with our mission and reinforces our core objectives. As Wilbrod mentioned, just 2 months ago in July, we held our 5th series of the annual Bankers Conference under the theme, Bridging Financial Gaps in the Manufacturing and Trade and Tourism / Hospitality and Agribusiness sectors to catalyze economic recovery and growth for 2021. We're very grateful to you, Professor Orama, for assigning a very valuable resource in the names of Dr. Hippolyte Fofak, who delivered a keynote address and enriched the conference immensely. We're very grateful. He enriched our conference with very practical Pan-African experience and interventions from Afrieximbank. The discussions and presentations shared during the 5th Annual Bankers Conference highlighted the importance of regional trade and the pull catalyst of the multiplier sectors of manufacturing and agriculture, as well as the missing links and gaps constraining the potential, particularly after the effects of COVID-19 pandemic. Talking about the pandemic not only put a strain on our health system, but led to unprecedented trade disruptions and a strain on Uganda's economic performance. The pandemic brought a strain and stress on supply chains, highlighting the interdependency of countries and industries, and reminding us about the need to build supply chain resilience. I wish to share with you some indicative statistics of the pandemic and the disruptive effects on our economy. The pandemic shock contributed to revenue shortfalls of Uganda shilling 3.2 trillion in financial year 2019/20 and Uganda shillings 2.2 trillion in financial year 2020/21. During the pandemic, we saw a sharp increase in budget deficits to 7.1% and 9.0% in financial year 2019/20 and financial year 20/21 respectively. Debt service to revenue during the time also increased to 30.6% in financial year 2021/22 from 21.7% in 2019/20. On the external performance, however, particularly on the trade side, a review of Uganda's export versus import and export values indicate that between July 2021 and June 22, the trade deficit rose from US dollars 314.56 million to US dollars 439.38 million, or in percentage terms, 39.7%. Important and positive to note, however, is that Uganda's merchandise export receipts increased by 3.8% from US dollars 365.13 million to June 22 to US dollars 379.16 million in July 2022. This was mainly due to the increased receipts from maize, simsim, vanilla, and hides and skins. The East African community was the major destination for Uganda's exports in July 2022, accounting for 57.7% of the export receipts. The pandemic clearly demonstrated the urgent need for growing cross-border trade, payment gateways, and settlement systems. The East African region has over 280 million people. Africa has other regional blocks in Southern Africa, West Africa, North Africa, all purposed for regional trade. The challenges of trade imbalances and foreign exchange risks can be best addressed via an arsenal of interventions being championed by yourselves and the Africa Continental Free Trade Area after aspirations. Afrieximbank plays a pivotal role in mobilization of capital that promotes trade flows and its delivery through a range of financing programs, solutions, advisory services to sovereigns, financial institutions, and the private sector. The chain of interventions and linkages, both backward and forward, creates job creation, foreign exchange, and economic development and transformation, which is what Africa desperately needs. This week's trade seminar is therefore very timely and most welcome, not only for our member banks, but for the other players in the economy who will inevitably need to be equipped with the skills, insights to calibrate the trade finance execution priorities in response to changes in the specific country vulnerabilities and business cycles to remain relevant in playing the very important role in the trade business and its facilitation. I wish to state that the banking sector remains your infrastructural partner, providing counters for trade finance expansion. We will leverage on the physical presence of Afrieximbank in Uganda to extend to our customers structured facilities as well as the payments and investment financing solutions much required to open trade boundaries across the region. As I conclude, I wish to salute Afrieximbank once again for this very crucial investment in their commendable short thought leadership and capacity building. We look forward to the knowledge sharing and learnings over the next 3 days to enable the banking sector mitigate the impact of trade disruptions as well as enhance bank and industry partner participation in global and regional value chains under these global economic uncertain times. Lastly, I'd like to thank Afrieximbank country teams and the UBS Secretariat under Wilbrod for all the efforts in organizing this seminar. I wish you all a good productivity over the next 3 years. Thank you for listening.
Thank you very much, Sarah. Let's put our hands together once again. Thank you so much, Sarah. I think there it is, the huge opportunities across the region for trade. Imagine DRC Congo has 107 million people. The huge opportunity there. When you interact with those who trade, my colleague from the Private Sector Foundation of Uganda has recently led a delegation there, and he said the huge number of things that are imported from Europe that are available here, that Uganda has comparative advantage. And we're just next door, brothers and sisters. And as you know, we do a lot of security work across the region. If only we could unlock that opportunity and supply that market and the reverse as well, the suppliers. How many people here have been to Southern Sudan? By just a quick show of hands. I can see this audience. You need to travel. When I was at university many years ago, Dr. Mitch mentioned very many years. The Minister of Education then told me, I used to be an active student leader. And he said, Wilbrod, these strikes you are constantly involved in, you are sitting on gold with the opportunities and behaving like a thug on the streets. Focus on your books and do greater things. I want to be part of those like Afrieximbank who do greater things. So at this juncture, I would like to invite Mrs. Kanayo Awani, the Executive Vice President of Afrieximbank, come and share with us many things that I know you have lined up in your remarks. Let's put our hands together for Mrs. Kanayo.
Thank you, Mr. Chairman. And I do know that the protocols have been well established, but please allow me to acknowledge the Honorable Dr. Matia Kasaiga, Minister of Finance, represented by the Director of Economic Affairs, Your Excellency President and Chairman of the Board of Directors of Afrieximbank, Professor Benedict Orama, Honorable Dr. Michael Atingiego, Deputy Governor of the Bank of Uganda, senior officials of the government of Uganda, my dear sister in every sense of the word, I'm also a city alum, chairperson of the Uganda Bankers Association and CEO of Citibank Uganda, distinguished guests, fellow bankers, directors and management at Afrieximbank, ladies and gentlemen, it is with great honor that I join Ms. Sarah Rapta to welcome you all to today's event. This is the 23rd session of Afrieximbank's series of trade finance seminars. If you imagine that the bank is 29 years old, you can appreciate that we've done this literally every year since we were born. We're also most pleased that the Ugandan government unequivocally accepted to host this year's seminar, which is the first physical seminar since COVID-19. We actually had one virtually in 2021. As the Master of Ceremony has said, he said that Ugandans are very warm people, which is true. And you'll agree that since we arrived here in Kampala, we have been accorded the most cordial receptions and been treated with extraordinary hospitality that they are known for. So on behalf of the management and staff of Afrieximbank, on behalf of all the speakers and participants gathered here, we would like to say, I've tried to practice these Ugandan words, we saela, but my driver who took me around this morning says is Wembali. So I got confused, but what I'm trying to say is, is thank you. Thank you as always. So I see the opportunity to welcome our banking, corporate, and policy partners who over the last 2 decades have been the anchor of the success of these seminars and learning programs. And for those joining us for the first time, this is not just a learning opportunity. It's not just about learning new products and concepts. It is a veritable platform to forge new alliances, networks, exchange business ideas, and also close deals, build solid, dynamic syndication relationships. This year's seminar holds under the theme Power to Trade, Navigating an Era of Crisis and Change, in consonance, in recognition of the crisis-induced turbulent global financial system that continues to adversely affect the world economy, as well as Africa and other developing countries being the most affected. The back-to-back crisis in the form of COVID-19 pandemic in 2020 and 2021, and the ensuing Ukraine crisis of 2022 have dented major global supply chains, and hence the ability of most African countries to access essential imports as well as agricultural and industrial raw materials and capital goods. Also, cost of financial inflows caused by exits of international banks have placed a significant squeeze on the capacity of African countries to pull their economies out of the throes of prolonged recession and undermined African governments' ability to diversify the sources of growth. This crisis and the attendant economic consequences have brought into sharp focus the preparedness and capacity of African financial system to roll out robust containment measures and programs to support the most vulnerable economies in the continent. Excellencies, distinguished ladies and gentlemen, one of the essential lessons from the global response to the pandemic and the ensuing Ukraine crisis is that the continent's ability to navigate these and future crises will depend on the existence of a robust, deep, and interconnected financial system. A robust and integrated financial system will help improve Africa's preparedness to confront global shocks by allowing us to collectively pool Africa's abundant but widely dispersed financial resources to cushion vulnerable economies and sectors from exogenous shocks. Also, a well-connected financial system can accelerate intra-regional trade and investments, and ultimately the realization of the goals of the African Continental Free Trade Agreement. Innovations in an integrated financial system will be critical to developing tailor-made solutions to the most complex challenges that confront our continent. At the height of COVID-19 pandemic in 2020 and 2021, when major international banks were cutting credit lines to the continent, Afrieximbank stepped in through the creation of the Pandemic Trade Impact Mitigation Facility. We called it PATINFA, through which we disbursed over $7 billion to shore up foreign currency liquidity across many banking industries in Africa. Furthermore, when COVID-19 vaccinations kicked in, it quickly became apparent that cash was king. That is, countries that could make advance payments were most likely going to be prioritized over countries, over others for the supply of vaccines. It became quickly clear to us that if we waited for aid and donations of vaccines, our people may perish. It was in that stride that Afrieximbank, at the request of the African Union, created a $2 billion advance procurement commitment guarantee program, which enabled Africa. Far about $6 billion has been disbursed under the Ukraine crisis program. Excellencies, distinguished ladies and gentlemen, we are able to deliver these novel intervention programs because of the strong partnership with many of you partners, Africa's banking partners. Over the years, your banks have been the most reliable conduits to delivering our innovative programs to the continent. We must nonetheless move the cooperation several notches up, and in that regard, we are opening new avenues for stronger trade and development-focused partnership among the African banking community. Afrieximbank created the Africa Trade Gateway. It is a super platform that houses a suite of digital products, one of which is the Pan-African Payment and Settlement System, we call it PAPS, which facilitates payments of goods and services across our borders in local currencies. What that means is that a buyer in Uganda can pay for imports from Malawi in Ugandan shillings, and the seller in Malawi receives payments in Malawian kwacha. PAPS is expected to transform payments in Africa and rapidly accelerate intra-African trade and investment. We invite our banking partners here present to seize the opportunities that PAP presents. Seize the opportunities of this Africa Trade Gateway, we call it ATG. Many of you may have heard of Mansa as well. Mansa is another product in that suite of products. And it's a KYC repository that will make KYC information and anti-money laundering information available to FIs and requisite businesses, investors, buyers, and sellers in need of such information to interact in Africa. Other products available on the ATG are the trade information and trade regulation products and the transit guarantee products. We call it the Afrieximbank African Collaborative Transit Guarantee Scheme. These initiatives and products will be discussed in further detail over the next 3 days. Also, the bank has created the Afrieximbank Trade Finance Facility, we call it AFTRAF, through which we are offering LC confirmation lines to African commercial banks to close the void that has emerged to the exit of international banks. Our target is to onboard and provide lines of credit to at least 500 of the 600 regulated banks on the continent. Today, we are well on our way to achieving our target at over 400. Excellencies, distinguished ladies and gentlemen, in addition to the learning seminars, these tools are among the many initiatives that Afrieximbank has created to boost connectivity among African banks and to kickstart the process of building an integrated continental financial system that is capable of containing the consequences of future shocks on the African economy. It is in that context that this year's Trade Finance Seminar is designed to, among others, briefly refresh our understanding of the current crisis and its implications for our dear continent, introduce many of Afrieximbank's crisis containment programs, as well as programs to accelerate trade, development, and expansion in Africa, while reminding us on the essential credit and compliance risk mitigation tools to mitigate the impact of these crises on our various institutions. It will also help our understanding of the African Continental Free Trade Agreement, which is an important pathway for our development as a continent and towards Agenda 2063, the Africa we all want. And as it has become customary for Afrieximbank events, we have again gathered or assembled some of the most talented, knowledgeable, and experienced industry practitioners to lead the discussions on the rich and educating seminar contents. It is our sincere hope that you'll find these sessions most impactful. As I draw my speech to a close, I would like to highlight, as you may have seen in the program, that as part of this morning's opening ceremony, the bank will formally launch its learning platform called the Afrieximbank Academy. We call it, for short, AfraCAD. This is a harmonized learning platform that offers a seamless and coordinated learning experience under one umbrella, bringing more efficiencies in the delivery of Afrieximbank training and capacity building programs. The AfraCAD platform is a knowledge hub that houses several programs that are tailor-made to offer innovative learning solutions centered on trade-related matters to both Africans on the continent and Africans in the diaspora. The training offers knowledge sharing and upskilling rooted in best practices and peer-to-peer learning. My colleague, Mr. Stephen Kauma, the Director and Global Head of human resources at Afrieximbank, will provide further details on this platform and what opportunities they offer to the banking community and to the private and public sector. In closing, finally, Your Excellencies, I would like to once again extend our unwavering appreciation to the government of Uganda for being an excellent host of Afrieximbank and for your strong support that has ensured a seamless organization of this seminar. I thank you for your kind attention, and we look forward to very interactive sections. Wembale again, thank you.
Thank you very much, Mrs. Kanayo, and for learning very, very fast. You're a good learner of how to say thank you and many other things. Thank you very much for your wonderful remarks. I think the audience, I believe you're already seeing how rich these sessions are going to be. Just based on what she said, speaks to the many challenges that we face as a country, foreign exchange cover, for us in the banking sector, those payment guarantees that we need to enable transactions. But you also had her speak about size of transactions. You had about 7 billion in the PATIMFA, the $2 billion in COVID, and the 6 billion in the supply chain interruptions from Ukraine. So big numbers here, and of course the coverage around Africa, particularly the payment gateways. I think that's one of the single biggest challenge for cross-border trade, particularly if we can trade and you get the equivalent in your local currency instant. I think it will be wonderful, wonderful. And as I'm just about to invite the Deputy Governor, but I think what she spoke to really goes to the bottom of our challenges across this region and how we can unlock trade. And I think Bank of Uganda, I think as we embrace these solutions, we hope that as our financial institutions partner and provide the counters that Sarah spoke to, we can then structure these transactions well, and the other challenge of provisioning can be better addressed with this sort of guarantee framework. I mean, she spoke to many things, including the crisis containment programs. I recall when we met with the manufacturers and we're speaking about the export potential, this was an issue. And I think through the discussions, we hope that we shall cover more of that. So I think we'll have a very rich, pregnant learning session that we should make use of as much as possible. You're welcome, Moses Kagwa, the Director, Economic Affairs. Let's put our hands together for him. As you came in, we're just discussing the challenges that the country has, shortfalls in revenue targets, and of course all the other issues around trade. But it's amazing I have been privileged to work in West Africa at United Bank for Africa, and I saw the huge opportunities that those countries in West Africa took advantage of Afrieximbank to open up opportunities for trade, huge, huge business. And I think that's what we need. If after the 6th, we leave these sessions and don't add value, then we will have done our country disservice. It just can't be better than this. So at this juncture, Stephen, I will not speak about the program you are going to launch. I'm looking forward to it. But at this juncture, let me invite the Deputy Governor to come and address the audience, Dr. Michael Atingego. Let's put our hands together.
Thank you, Wilbrod. the Honorable Minister of Finance, Planning and Economic Development, represented by Director Economic Affairs, Mr. Moses Kagwa, Professor Benedict Orama, President and Chairman of the Board, Afrieximbank, Mrs. Kanayo Awani, the Executive Vice President of the Afrieximbank, Chairperson of the Uganda Banks Association, Executive Director, Uganda Banks Association, distinguished experts and panelists, and all of you here in your respective capacities, members of the media fraternity, ladies and gentlemen, a very good morning to all of you. My task this morning here is a simple one, just to give a goodwill message. But let me start by thanking Professor Orama and the Afrieximbank for hosting the Afriexim Trade Finance Seminar, which I'll call here after ATFS 2022 in Kampala for the very first time. Thanks again to you, Professor Orama, for delivering through your very able delegate a memorable keynote address at the recent Uganda Annual Bankers Conference for 2022. Compliments for choosing the power to trade, navigating an era of crisis and change as the theme for the ATFS 2022. Not only is the world still reeling from the impact of the COVID-19 pandemic on the global supply chains, but it remains in the throes of an escalating Russia-Ukraine conflict that has escalated the prices of vital commodities. Perhaps the most outstanding winner of the recent turmoil is the acceleration of digitalization as a factor in the resilience of service delivery in crisis times. I want to believe that the participants for the ATFS 2022 will leave this seminar with relevant and actionable knowledge, skills, and richer networks among notable trade finance practitioners. I commend Afrieximbank for championing the building of capacity for understanding international trade, trade finance, and trade-related project financing, and the various tools available to structure financing by instilling the skills required to meet the challenges of financing transactions, especially in times of economic uncertainty. I also believe that through these seminars, this being the 22nd annual event, Afrieximbank will help to improve African position in world trade. Strikingly, Afrieximbank's African Trade Report for 2022 shows that Africa remained peripheral contributor in the global trade at less than 3% in 2021. Also, the 2022 African Economic Outlook by African Development Bank reveals significant financing gaps for Africa's trade that betray insufficient policy support from government and the legal, regulatory, and financial sectors. As a result, limited access to finance continues to stunt the growth of Africa's trade sector. The pandemic and the geopolitical tensions, together with knee-jerk protectionism and the trade barriers by some countries, have amplified the challenges facing Africa's trade and trade finance. Financial flows have been hampered by heightened uncertainty and growing risk, thereby starving frontier economies of the much-needed liquidity. Fortunately, this rich seminar has sessions dedicated to these emerging risks and the bread and the butter topics of trade finance, such as factoring. Naturally, these seminars are a supplementary initiative to the role played by the regional development finance institutions like the Afrieximbank and the African Development Bank in facilitating trade in our continent, not least through aiding firms with working capital and credit guarantees, among other facilities. Indeed, Afrieximbank has financed trade since its inception to date. For example, for the first half of 2022, Afrieximbank approved loans worth nearly 21 billion, following in from loans of 18.1 billion in 2020 1 and 16.3 billion USD in 2022, indicating a steady rise in trade and trade-related project finance lending. On the other hand, African financial institutions' provision of trade finance lags behind the global performance. Data from African Development Bank shows that from 2011 to 2019, banks intermediated about 40% of the total African trade, compared to the worldwide average of 80%. Similarly, the share of small and medium enterprises, the SMEs, in trade finance applications rejected by banks increased from 20% in 2013 to 40% in 2019. The pandemic is likely to have worsened the financing gaps for SMEs, given their limited scope for resilience to protracted shocks. According to the World Bank, SMEs, which make up the most significant portion of the businesses in Africa and contribute to about 60% of total employment and about 40% of GDP in emerging economies, remain locked out of the local and international banking systems compared to companies and multinationals. The International Finance Corporation, IFC, calculates the financing gap across all types of financing for 44 million micro, small, medium-sized enterprises in Sub-Saharan Africa to be close to US dollars 331 billion. Therefore, solutions seeking to close the trade financing gap in Africa would do very well to focus on MSMEs because they offer an engine for inclusive growth in Africa. Moreover, the prevalence of a large informal sector in Africa complicates in determining what makes a bankable project stroke enterprise. Informality makes providing and accessing trade finance costly, risky, and not so profitable due to the numerous challenges, including but not limited to: 1, new banking regulations of know your customer, anti-money laundering, that is KYC, stroke AML, the Basel III and the strict capital requirements that have increased the cost of carrying out due diligence, making funding for SMEs costly and sometimes unprofitable. Secondly, the stringent collateral requirements, high cost of capital, and lengthy credit assessment periods. Thirdly, the requirement of confirmation of letters of credits, as all LCs issued by African banks need proof when counterparty is located outside their region. Fourthly, the dominance and the global strengthening of the US dollar as the preferred trade currency increases the need for scarce foreign exchange liquidity, thereby constraining trade finance by some banks. And lastly, most African countries have poor sovereign credit ratings, resulting in low lending limits by international financiers and a higher cost of borrowing. I'm therefore happy to note that the ATFS 2022 will incorporate technical aspects of structuring trade finance transactions, thus enabling participants to adequately identify risks in trade finance transactions and to structure bankable trade and trade-related project finance deals of varying levels of complexity, as well as offering trade finance refreshers for practitioners to encourage and enable the implementation of the best practices across Africa. Regarding the state of play in Uganda, if you may allow me to say something, from about shillings 525 billion in letters of credits to nearly 3.5 trillion shillings in guarantee instruments as of June 2020, the letters of credits had grown to 778 billion, and guarantee instruments increased to 4.44 trillion in June 2022. There's a lot of untapped potential that needs to be unlocked through all stakeholders playing their respective roles. There's also a need for a multifaceted and unified approach that embraces the efforts of government, development financial institutions like the Afrieximbank, the ADB, the international and local banks, large corporations, and MSMEs to address the trade financing gap. The digitalization of Africa's trade ecosystem through adopting cloud-based solutions, blockchain technology, artificial intelligence, and machine learning will address some of the trade financing gaps by harnessing data for differentiation of borrowers, including informal firms. In addition, establishing a robust cybersecurity measures to ensure digital trust and interoperability amongst the different trade facilitations platforms will undoubtedly address some of the trade finance gaps in Africa. Integrated payment systems such as Afrieximbank's Pan-African Payments and Settlement Platform, known as PAPS, and the Southern African Development Community, SADC, Integrated Regional Electronic Settlement System, what they call the CIRES, will be crucial in lowering transactions cost and supporting informal cross-border trade. Adopting financing solutions such as co-financing, loan syndication opportunities, and alternative financing across the continent could increase the chance for the MSMEs to access funds to support their participation in Africa's intra-regional trade. Participation in the African Continental Free Trade Area will boost intra-African trade by about 52.3% once import duties and non-tariff barriers are eliminated. And this will enable value addition of goods and services and increase productivity and business opportunities. Therefore, all stakeholders should play their respective roles within their mandates to actualize the African Continental Free Trade Area by creating an effective single market and a free trade area, boosting intra-regional trade, creating opportunities for scaling up trade finance, and boosting the continental economic growth. Ladies and gentlemen, the untapped potential of Africa should motivate all the participants in this seminar to seize the moment by exploiting all the knowledge and the skills that will be shared in the different sessions profitably. The course context, in particularly, is suitable because it blends traditional topics such as commodity finance, structured trade, and compliance with contemporary and emerging issues such as digitalization, harnessing trade data, and mainstreaming environmental, social, and governance standards in trade finance, not to mention the impact and lessons from the COVID-19 pandemic, as well as the geopolitical risks. Therefore, kudos to Afrieximbank for this comprehensive menu of topical and progressive seminar. Once again, I want to thank the Afrieximbank for choosing Kampala to host as the host city for the 22nd ATFS event. Thanks to all the organizers and the participants for dedicating time to this noble cause. I therefore want to wish you all a fruitful ATFS 2022. Thank you for listening to me, and may God bless you all.
Thank you very much, Deputy Governor. It's quite refreshing to have everybody keep making mention of how wide and how deep the content is going to be for the next couple of days. But maybe we should just take a couple of seconds, draw your attention to the screens, and see what we've got in store for you for the next couple of days. All right. Now, you see, an event of this magnitude wouldn't have been possible if we didn't have some really powerful sponsors and partners to work together with. So I'd like to take this moment to say a special thank you to Sahara Group. They're your fantastic partners in terms of energy if you're looking for any, and they've partnered with us for this particular seminar, and we'd like to thank them. Let's just give them a round of applause. I'd like to thank them for all of their support. But at the same time, you see, they've managed to get you here to Uganda, the pearl of Africa. And as I was walking outside, people said, okay, so we've started the event, but I actually don't feel welcome. And you see, in African culture, you can't be welcome unless you can at least speak some of the language. So I felt that the responsibility rests on my shoulders to make sure that each of you can communicate in the local language. So I'd like you to turn to your neighbor and look your neighbor in the eyes and say, look, we're going to learn the language. Now, as Luos, our language is very simple, you see. In Africa, there are no complications like, good morning, how are you, what's happening, how's the GDP, etc. No. In Africa, it's very simple. Like, in Zulu, you say, sawubona, I see you. In Luo, they say, wunitie, are you there? Then you just answer, of course, we are here. Where else would you expect me to be? So when somebody asks you, wunitie, you say, wanotie, wunitie. So turn to your neighbors and ask him, wunitie, then you have to say, very good. So now you are all honorary Luos. So I shouldn't have any problems with, I hear les francophones ne peuvent pas parler avec les anglophones, the French can't speak to the English. We have a common language. But speaking about common languages, I'd like to introduce somebody who's very dear to the business. He happens to be somebody who originates from Uganda. I went to school with one of his brothers, and he's a director, and he's the head of human resource at Afrieximbank. He's going to be here to tell us more about one of the great solutions that Afrieximbank has come up with. So please welcome Mr. Stephen Kauma.
Wunitie. All right, you haven't forgotten it, have you? So the Honorable Minister of Finance, Planning and Economic Development, as represented by the Director of Economic Affairs, Mr. Moses Kagwa, Professor Benedict Rama, President and Chairman of the Board of Directors of Afrieximbank, the Acting Governor of the Central Bank of Uganda, Dr. Michael Atingiego, Ms. Kanai Wawani, Executive Vice President, Intra-African Trade Bank of Afrieximbank, Ms. Sarah Arapta, Chairperson of the Uganda Bankers Association, Mr. Wilbrod Owor, Executive Director of the Uganda Bankers Association, senior officials in the government and the private sector, directors of Afrieximbank, Mr. Kudakwashe Matereke, Afrieximbank's Regional Chief Operating Officer for Eastern Africa, fellow colleagues at Afrieximbank, distinguished ladies and gentlemen. My name is Tio Kauma, and as Mitch has said, I'm a son of the soil. Allow me to express my sincere appreciation to all of you for gracing the official launch of the Afrieximbank Academy, AfraCAD, with your presence. Unlike Mitch, I'm not a doctor of anything. I don't know how to deal with people who bark like he does, but I hope that what I'm going to tell you about will be interesting and exciting to you. Since its establishment, Afrieximbank has been at the forefront of building the capacity of Africans on the continent and in the diaspora in trade-related matters. Indeed, this is the 23rd Trade Finance Seminar that we're holding, and it's a pleasure that it's being held in Uganda today. Under the bank's 5th strategic plan for the period covering 26 to 2021, we planned for the bank to create a responsibility center under which all its various capacity building initiatives will be housed. And this was for the following reasons: to create economies of scale, to ensure broad alignment to the bank's strategy, to facilitate the process of evaluating and measuring the impact of learning outcomes, and to create a uniform and visible brand identity around leadership in trade-related capacity building programs. On the 17th of December 2018, I submitted a memo to President Orama, which was a proposed framework for the creation of Africad. President Orama, as always, was very supportive of the idea and instructed us to start on the process of establishing the academy. As part of this process, in 2019, we visited the EcoBank Academy in Lome, Togo, the Standard Bank Global Leadership Center in Johannesburg, South Africa, and the UBA Academy in Lagos, Nigeria, to pick lessons from their own establishment experience. Between October 2020 and May of 2021, we worked with South African-based firm Deloitte Alchemy to develop a comprehensive 10-year business plan for Africad. To guide this process, we had a steering committee chaired by myself with 6 staff from the bank and 2 external partners who I would like to thank here today for their time. Mr. Simon Ray, who's head of the EcoBank Academy in Lome, and Professor Andreas Klassen of Offenburg University in Germany. In May 2021, we submitted the final business plan of the Africad to the President for consideration. The business plan, as submitted, confirmed that it was financially viable for the bank to set up an academy of this nature. Some of the key outcomes from the business plan include the following: a plan to train up to 100,000 people over the next 10 years, which is an average of 8,200 trainees per year. You can count yourselves part of these trainees. To offer up to 58 different learning offerings over the 10-year period, and of course, looking at earning annual gross revenues of up to $6 million per year, although I would like to mention that this is not necessarily for profitability purposes, but to ensure that the Africad is financially viable to meet its own costs. From the time the business plan was approved in 2021, we have done the following: engaged 2 learning specialists to assist in the implementation process, designed a brand identity for the academy, started on the procurement of a modern digital platform. We have also started implementing a proof of concept for Africad using the Certificate of Trade Finance in Africa, also known as COFTIA. This is a program which we are running with the American University of Cairo, their School of Business, and FCI. And currently, we have a total of 47 people from 15 different African countries attending this hybrid course, which runs over a 6-month period. There's a catalog for this course, which I believe all of you have received a copy of. I'll be telling you a little more about it shortly. We have also started on the process of getting accreditation, beginning with the Chartered Institute of Bankers of Nigeria. We'll be reaching out, of course, to the Uganda Bankers Association and other relevant bodies for accreditation in Uganda and East Africa as well. Now that Africad is being launched today, we are excited about the journey ahead of us and driven by the dream to create the foremost trade-related learning academy on the African continent. Allow me to thank President Orama and the management and staff of Afrieximbank for their continued support and guidance that brought this project to life. I also want to thank my colleagues from the Learning and Performance team, Mr. Jean-Patrick Habyarimana, who's the head of the Learning and Performance team, Ms. Anna Nshendi, Dr. Farai Mukwambo, and our intern, Rachel Kabiswa, and to all Afrieximbank staff who have been and are still part of this project for their support. As I conclude, allow me that I'm happy to announce that yesterday the President signed off a proposal for us to announce that as part of the celebration of the launch of this academy, we will offer a 50% discount, let's call it a scholarship, for one person from each of the institutions that are represented here today on the certificate of Trade Finance in Africa, COFTIA. This is the program. This is for the course for 2023. And as I said, this is a flagship trade finance course, which is one of the most comprehensive on the continent today. So we encourage you to register for this. The registrations for the cohort for 2023 will open in November this year. Kindly register your interest with the information desk for this purpose, and we'll be letting you know more about the details of this through the Uganda Bankers Association and through the other relevant bodies that we deal with for our members from the other parts of the continent. Now, allow me the honor, as I close, of inviting the President and Chairman of the Board of Directors of Afrieximbank and the Deputy Governor of the Central Bank of Uganda, Dr. Michael Atingiego, to come and unveil and launch Afrieximbank officially, and of course, followed by the Director of Economic Affairs, Mr. Moses Kagwa, who is representing the Minister of Finance, Planning, and Economic Development. I thank you very much for your time.
Ladies and gentlemen, we'd like to kindly ask the President, together with the Director, together with the Executive Vice President, together with the Head of Human Resource, together with our Deputy Governor, to all officially unveil the Afrieximbank Academy. Thank you very much.
We'll now have a video to tell you more about what the Afrieximbank Academy is all about. Thank you all very much for your time.
The baobab, tree of knowledge, tree of life, symbolic of Africa's richness of wisdom through the ages, spreading roots across the continent, a timeless foundation to anchor, enrich and inspire each generation, and the inspiration for the new Afrieximbank Academy. Established to advance African talent across our stakeholder groups, including corporates and SMEs, sovereigns and parastatals, financial and educational institutions, and Afrieximbank staff. Afrieximbank Academy will strive to build the capacity of Africa and Africans in all trade-related matters, enhance knowledge and skills in trade finance across the continent, create a center of excellence to facilitate knowledge transfer, best practice, research, collaboration, better connection among the bank's internal and external stakeholders, and improve stakeholders' ability to support the bank's mandate of transforming Africa's trade. Ultimately, Afrieximbank Academy will be the go-to hub for Afrocentric trade knowledge and skills, helping to unlock trade development opportunities across the continent. Afrieximbank Academy will provide high-impact learning solutions in trade and project finance, industrial capacity, innovation, professional development and leadership, trade language and also promotes knowledge sharing and networking, helping to rapidly digitize the future of Africa and improve the trade environment by promoting knowledge of trade and commodity finance, risk-based financing, robust and transparent product standards, access to financing, sustainable business practices, and embracing cultural and language differences, expanding the knowledge of trade agency professionals, as well as automating, digitizing, and instigating innovation. Afrieximbank Academy learning will be delivered through a hybrid approach, combining physical locations and digital channels to maximize effect for a fully immersive learning experience. See our catalogue to discover how you can start leveraging Afrieximbank Academy today. Afrieximbank Academy, bringing innovative learning solutions to transform Africa's trade.
All right, congratulations. So we've got a new academy, and what we'd like to do right now is to take a quick break. But just before we do the break, we'd like to take some pictures on the steps. So I'd like to ask the President, the Director of Economic Affairs, the Deputy Governor, together with the EVP, and together with your guests, to kindly make your way to the steps. They'll preset you. And then I'd like to ask all of our kind guests and delegates to also follow suit. As soon as we're done with the pictures, we'd like to invite you to have tea, and then we'll be back in the room within the next 10 minutes so that we can kick off with the next session and then have a quick lunch and come back in the afternoon. Thank you very much. Merci beaucoup. Ladies and gentlemen, can I kindly ask all the guests to kindly stand? We are waiting for you to take our pictures, and then we can have tea. Thank you very much. Kindly make your way to the steps, and we will be guided. Ladies and gentlemen, if you can kindly make your way to the steps. We'd also like to bring to notice the members of the press corps. We have a press conference which will be starting right after the pictures in the Mira room. So kindly go down the stairs. To your right, you'll be guided. Press conference will be starting as soon as we're done with the picture. Thank you. All right, ladies and gentlemen, can I kindly ask that we take our seats? We'll be starting in the next 2 minutes. Kindly take your seats. Veuillez vous asseoir. On va commencer dans 2 minutes. Merci beaucoup, mesdames et messieurs. Okay, so welcome back from our tea break. You know, I think in the introductory segment, we heard Wilbur talk about how it's become an inside joke that everything that happens, people are blaming it on what's happening in Ukraine. Husband and wife are fighting. You say, I don't love you anymore. It's because of your love for Ukraine. But you see the challenges which governments are facing right now, the cost of fuel spiraling right, left, and center. There's so many, I say, knock-on effects. And to actually understand this a lot more, it's my great pleasure to understand that we have somebody who's quite gifted. I asked her, what would you do if you weren't a macroeconomist? And she said, you know, there's nothing else that I do. My entire life is macroeconomy. She's originally from Croatia, and she's here to tell us more about the impact that Africa has had because of the war in Croatia. Actually, the war in Ukraine and Russia. But that was some time ago, but now this is something bigger. Ladies and gentlemen, please welcome our speaker today, Izabela Kapowicz.
Thank you. Thanks very much for the warm introduction.
Yes, she's actually the IMF resident representative here in Uganda. It's a great pleasure. We'll have her here. Kindly keep your questions. We've got 10 minutes afterwards, and we'll be good to go. Thank you very much.
Thanks. Thank you. Please disregard my bio. There are some inaccuracies there in the publication that you are looking at. And thanks for showing my slides. Yes, this was the topic that was assigned to me, and I'm kind of don't talk lightly about the Ukraine-Russia crisis, because a lot of what is going on today is not the result only of the Russia-Ukraine war. So I was told I have about 45 minutes for a presentation and 15 minutes for questions. I have a lot of slides to show you, but luckily they're only pictures, so you can still listen to me talking and not read from the slides. As I've been introduced, I represent the IMF in Uganda. That means I work on Uganda, and I can answer many questions about Uganda. But for any other countries in the region, I may have to postpone my answers to some other time. So I'll speak globally about Sub-Saharan Africa, but if you have detailed questions about specific countries, I can maybe answer in another occasion. So the presentation will be about the spillover channels of the war in Ukraine, the immediate policy priorities to maintain stability over the short run, and the essential economic reforms to create jobs and meet developmental objectives in sub-Saharan Africa. I will talk also a little bit about the international community role in supporting the recovery and building resilience. Let me see if I know how to use that. Where do I point? Anywhere? Okay, thank you. So the way in which the war in Ukraine has manifested itself on sub-Saharan Africa is through three channels, mainly energy prices, food prices, and financial conditions. I can add to that also the slowdown in advanced economies and in emerging markets, slowdown especially in Europe that is consequential for Africa's trade and growth prospects. In the month since April, this is the time when we have presented our last regional economic outlook, growth projections have been scaled back worldwide. I can unfortunately not talk much about the most recent numbers we have, and this is because we reserve this opportunity for the annual meetings during which we launch the new regional economic outlook, and that happens just a week from now. So the timing for this presentation is a little bit unfortunate, but I can still talk about the direction in which things are moving. So the war in Ukraine presents another major challenge for the region's countries that is compounding the highly consequential economic effects that COVID-19 pandemic has already caused. These include a markedly lower output path, a reversal in development gains, and elevated macroeconomic imbalances, including heightened debt vulnerabilities. I'll talk about that today. While direct trade and financial linkages between Russia and Ukraine and most sub-Saharan African countries are relatively modest, the economic consequences of the war, like that of the pandemic, are being felt most acutely in sub-Saharan Africa, more than elsewhere. This is a recent figure I can show you about the global inflation. It shows that the average global cost of living has risen more in the 18 months since the start of 2021 than it did during the preceding 5 years combined. And as you see in the chart, the contribution of food and energy to global inflation is most pronounced. This is not to say that the prices of other items are not rising too. For instance, service inflation has increased in the United States and in the Euro area. And the relative impact of food and energy and other items is driving inflation and varies considerably across countries. This is a slide that breaks down the food and global oil prices, and it shows that they have been particularly turbulent in the last year. Wheat, for example, almost doubled at the onset of the war in Ukraine, although it has returned since then to pre-war levels. What does it mean? What does this mean for the sub-Saharan African countries? Well, for the 8 net oil exporter, this presents a windfall gain. And exporters of some other commodities like copper and gold have also benefited from higher commodity prices. However, for the remaining 37 countries, higher oil and gas prices result in a significant negative terms of trade shock, which worsens trade balances. And I know you're all interested about trade. These high prices put pressure on the standards of living and weaken fiscal balances. In addition, we have been most concerned about the soaring fertilizers cost and what they bring from agriculture. Fertilizer costs have tripled over the past 18 months. The region is highly dependent on fertilizers imports, and the fact that those prices are going up means that the already low application rates will be even lower going forward. And this would add to import costs, trade deficits, and will undermine local budgets and may also put food security at risk. This is how the global commodity prices have translated into sub-Saharan Africa inflation, which we also seen picking up. The average inflation rates have been around 10% and above, both for food and non-food. And the chart to the right just shows the direction of the impact for oil exporters and non-oil exporters of the terms of trade shock. So this is just a figure that is plotting historical terms of food price shocks against the overall inflation. And what we can see from this chart is that there is a lag effect of commodity prices to the general inflation. So it may very well happen that what we are observing in this last period now, in the last 12 months, translates into higher inflation even in the next year. And as a matter of fact, in the new regional economic outlook, we have revised our projections of inflation for the region for the 2003 by a couple of percentage points, I have to tell you already. But it varies again depending on the economic patterns of the countries. This slide breaks down the various commodities that sub-Saharan African countries import and their prices. And we can see that maize, palm oil, sorghum, and wheat have gone up. And the one to the right shows all the countries in the region broken down by importers and exporters. And you see there is a lot of red there. These are all the countries that import the commodities which prices have increased. And that has, of course, an important effect on the trade balances of these countries. Now, the rising food prices are hurting the vulnerable population most. In Sub-Saharan Africa imports 85% of the wheat it consumes. And of this, Russia and Ukraine account for 1/3. The impact of rising global prices disproportionately harms the poor, and it exacerbates the already high levels of food insecurity. The chart to the right shows the prevalence of moderate to severe food insecurity as percent of population in Sub-Saharan Africa. It's much higher than elsewhere. What's compounding this very difficult situation is also highly volatile global financial conditions. Sovereign yields have initially increased at the onset of the war for most borrowers, including emerging markets and frontier markets in Sub-Saharan Africa. Yields have eased somewhat more recently. However, capital flows have remained precarious. For the first half of this year, outflows from Sub-Saharan Africa rivaled those associated with the onset of the COVID-19 crisis and the 2015 commodity shock. So I have talked about inflation a lot. I know everybody has noticed it, even without my presentation. And so far I have spoken about the imported food and commodity prices, but what about the domestic production? And can it compensate for the high, very costly imports? And is there space for more import substitution? Well, potentially yes, but climate change stands in the way. So what you see at the left, on the left-hand side chart, is the Economist's Global Food Security Index, which assesses countries' food security outlook. 28 sub-Saharan African countries are represented in that index, which measures performance across 4 pillars of food security: availability, affordability, quality and safety of food, and natural resources resilience. For decades, insecurity in sub-Saharan Africa has been rising faster than in the rest of the world, largely owing to mounting pressures from high population growth and lack of resilience to climate change. Climate change is set to further intensify food insecurity. Frequent and recurrent droughts, floods, cyclones, and rising temperatures and sea levels have become the new normal in the world. 1/3 of global droughts occur in sub-Saharan Africa, and this is something that brings us to the chart on the hunger map. Currently, Eastern Africa, including Ethiopia and Kenya, is suffering one of the most severe droughts in recent history, and Angola is undergoing the 5th consecutive year of drought. This is another way of looking at the Horn of Africa. The map to the left is from May, and the one next to it from June, September, and you see how the areas on the right-hand side are darkening, indicating emergency and famine situations. We also have noticed that at times of drought, food insecurity shows more pronouncedly in the year after. So possibly we have not seen the worst of it yet. Food insecurity is strongly associated with political instability as well. In recent years, the prevalence of political instability and military coups has increased in the region. Since August 2020, military forces have assumed control in 4 countries: Burkina Faso, Chad, Guinea, and Mali. Coups have been attempted in another 2 countries, Guinea-Bissau and Niger. The region is confronting several armed conflicts and terrorist threats, including in Ethiopia, Nigeria, Democratic Republic of Congo, Central African Republic, and Mali. In Ethiopia, hostilities have escalated already in November. Against this somber background, apologies for that, there are 4 priorities for the short term. One is for the policymakers to address, to balance global inflation, country inflation in the light of global shocks and growth, manage the exchange rate pressures, reduce debt vulnerabilities while also protecting the poor. Even as growth momentum softens, central banks need to be prepared to raise rates if inflation expectation drifts up. This is the recommendation that we made in our previous regional economic outlook in April, and it remains valid today. The central banks will also need to guard against rising financial stability risks while maintaining a credible policy framework. Closely related are the exchange rate pressures stemming from the volatility in flows and tightening monetary policies in advanced economies and emerging markets. With policy rates increasing worldwide, debt vulnerabilities are even bigger now, and fiscal consolidation in many countries remains unavoidable. However, it needs to be gradual and mindful of the poor. I'll talk a little bit about that. So these are just the priorities I have mentioned already. So this is a figure from our April publication in which we have advised the central bank to prepare for tighter financial conditions and tightening in general selected macroprudential tools. Now, what has happened since then? They have done exactly this. So the blue areas in the chart indicate the instances in which central banks in advanced economies and emerging markets have lowered their policy rates. Orange is the policy rate hikes. So you see, the past year and a half, the policy rates have been tightened in many, many countries. What is even more difficult is that the monetary policy cycles have become increasingly synchronized around the world. And importantly also, the pace of tightening is accelerating in several countries, particularly in advanced economies, in terms of both frequency and magnitude of rate hikes. Some central banks have also begun to reduce the size of their balance sheets, moving further towards normalization of policies. This is just slide outlining the exchange rate pressures, but maybe more importantly, this one shows the cumulative change in exchange rate against the US dollar since the COVID-19 shock. And you can see in the majority of countries, certainly the non-oil exporters, the exchange rates have depreciated, further putting pressure on trade balances and on the reserves. In real effective terms, actually, the changes are not as high because inflation has also increased in many countries. Moving to the fiscal policy challenges and the debt vulnerabilities. So the regional indebtedness is now approaching the pre-HIPC levels when the countries have received debt forgiveness in the early 2000s. Albeit with a different composition, the situation is much more difficult today. We have substituted low-cost multilateral debt with long-term maturities, with higher cost private funds with short-term maturities. And therefore, we are facing much higher debt servicing costs. 20 out of 35 low-income countries in sub-Saharan Africa are either in debt distress or at high risk of debt distress. And of the remaining 10 countries in sub-Saharan Africa, 3 are faced with spreads that are now 1,000 basis points higher than 6 months ago. So the fiscal authorities are facing a very difficult balancing act. They need to consolidate the budgets in an environment where revenues are still weak because the economies are only recovering from the COVID-19 pandemic. And they need to do that while protecting the poor, so in a possibly gradual way, and by minimizing the generalized subsidies. These are some of the recommendations we have given countries that are facing persistent global price shocks. So as a first best, we have advised the economies to avoid price controls at any cost because they just generate shortages. The first best is always to let international price shocks pass through fully into domestic prices and cushion the social and economic impact through targeted transfers. However, this is not easy. Many sub-Saharan African countries do not have a strong enough social safety nets that can be scaled quickly to protect the poor population. So second best would be to find other ways to provide support to the vulnerable, possibly in a targeted way, and most importantly, in a temporary way. There are several mechanisms to do that. One of the options would be to provide school lunches to the children, and sometimes use the tax policy also to provide subsidies, but they, however, need to be scaled down after the crisis has subsided. And this is what the countries have done in response to the shock and in response to the recommendation. This is a survey that was conducted in the IMF showing the measures that have been implemented since January 2022. And you can see that countries have done different things, and almost every country has done something to protect the poor. And this in the most disparate ways. Some countries have continued to provide fuel subsidies, which we strongly advise against, and food subsidies. Most of the measures have been temporary in nature, and unfortunately most have been untargeted. But this is precisely what I've been talking about, the weak social and safety net and the difficulty in identifying and targeting the poor. On the right-hand chart, we show that existing support to agriculture was not substantial. Only 4% of total public expenditure ended up in support to agricultural production. What are the main challenges for the medium term that the authorities should act upon already now? One is facing the energy transition, taking advantage of the energy transition to address climate adaptation, diversifying the economies, and boosting the private sector. This is, okay, let me skip a little bit to gain some time. So you see from the left-hand chart, and hopefully this is something to, that you're acquainted with. The chart shows export concentration. And Sub-Saharan Africa are the countries that, where exports are more concentrated than elsewhere. And also the role of primary exports is much, much higher. Well, we see that as a source of vulnerability. Reliance on commodity exports makes countries highly susceptible to the fluctuation in commodity prices, which is what we are witnessing now. We have also seen that resource-intense economies suffer from significantly weaker economic growth. For these countries, average growth in the past decade was about 3.1% and considerably lower than the 5.9% experienced by non-resource intense countries. So regional trade integration, complemented with resilient transport infrastructure, enables sales of one country's bumper harvest to the neighboring countries that are facing shortages. And this sustainability improves household welfare by reducing food insecurity and promoting stability of food prices. So as the Deputy Governor has also mentioned, this involves not only reduction in tariffs, but also regional alignment of laws and regulation governing agriculture and inputs, and bringing products to markets that would enhance growth of climate-resilient infrastructure. This is a slide, we don't have to go through all of it, but just telling you a little bit what the IMF is doing in the region, what has been our role. So we have stepped up our financing. We have many programs implemented by sub-Saharan African countries that are now enjoying IMF financing. And we have also provided debt relief at the onset of the pandemic to some of the countries for a total of 23 billion of SDRs. We have also, 1 billion SDR dollars. We have also issued a new allocation of SDRs in August that has boosted reserves in many countries, and in some has been used to support budget financing. And we have just recently passed a new food shock window under which countries can access additional financing if they are facing food insecurities. We are also providing technical assistance, both through headquarters and also through our regional technical assistance centers. And we are leading dialogue with multinational institutions and with other development partners, and trying to convince them to support our resilience and trust fund, through which we can scale up our financing to sub-Saharan African countries. However, financing is still falling short on what is needed. There is much more that is needed, especially to scale up green infrastructure for climate adaptation policies. And we are hoping that private partners can also participate in this effort to leverage financing in order to help sub-Saharan Africa become more resilient and resist the food price shocks in the future. I want to leave you with these key messages and recommendations that you have already heard in my presentation, and open the floor for some questions that you may have on the issues discussed today, or anything else that you would be interested about from the IMF. I don't know if we have microphones running around or any questions.
I'm in the audience, so if there are any questions, you can put up your hands. Vous pouvez demander en français ou en anglais, il n'y a pas de quoi.
There is a gentleman there.
Merci. Thank you, Mrs. Isabella. I don't know, you speak French or only English?
Si, oui.
Okay, cool. Okay, I will ask one question in English and one question in French, please. Okay, thank you for your presentation. My first question regarding the subsidiaries given by state to the economic. You know, in Africa, we reject a lot of poor population. And in your recommendation, we see that if it's possible for the state to delete up the subsidiary. I don't know, if the country deleted in their program, is that mean normally the level of poverty will increase? I just need to know, if not, what the other solution can be found to mitigate the problem of a subsidiary in the state.
I'm not sure that you understand. You're talking about the program supported by the IMF, whether that increases poverty?
No. It's about the subsidiary.
Subsidy, okay.
Exactly. The subsidiary given by state to the population in fuel and also in food. I see in your one of your recommendation the possibility to reduce or delete it entirely in the program of a state. I don't know if I understand very well.
So what we have, I'm not sure what you got from that, but what we've been trying to say is that fiscal consolidation is necessary, but it's also painful. And it is coupled with the shocks that the population is already undergoing. So it is very important to use and scale up the social safety net in order to help the most vulnerable population move out through this difficult period in the crisis, okay? So food and fuel subsidies are one way of doing it, but it's not the best way. These are what we call the untargeted subsidies. These are subsidies that are more enjoyed, but those, especially the fuel ones, so let me put that aside from the food. Fuel is mostly used by the rich. The rich people are driving the cars. Poor don't have cars, they don't have electricity. Then those subsidies don't make, they trickle down to them a little bit as well, they use transportation. But in the course of giving them those little subsidies, you're wasting a lot of money on the rich. So what we are doing, don't go that road. That's what we're saying. Tax the fuel, get your revenues from your fuel and use that money to help the poor in more direct ways. Every country has some program that targets the poor. Uganda has, for instance, one that is very often mentioned. It's an elderly empowerment program. Those programs that are already existing in a country can be used to scale up financing to the more vulnerable ones. And then other ways could be used to reach the ones that cannot be reached. For instance, children in schools, as I said, some segments of population that are particularly affected. And even through maybe some decreases in excises on particular products that are consumed by the poor. If you know your poor eat cassava, let's say, we like to say cassava in Uganda a lot, then that's one place where you can help them. You know, you would lower the taxes on cassava.
I think it's clear.
That's what I meant. Thank you.
Nice, clear. Ok. Ma deuxième question concerne la lutte contre le climat, le réchauffement climatique. Ce que je voulais savoir, en tout cas c'est une proposition, est-ce qu'au niveau du FMI, on ne pourrait pas encourager la proposition selon laquelle celui qui pollue plus doit également payer une taxe à ceux qui ne polluent pas? Parce qu'on entend ces débats-là depuis un certain temps, mais ça ne bouge pas. Est-ce que ça ne devrait pas être un élément à ajouter dans vos politiques quand vous échangez avec les pays pour qu'on puisse effectivement imposer cela? Merci.
Oui, on fait ça tout le temps, tous les jours. Yeah, we have. Sorry, I will reply in English because my French is a bit rusty. So we do recognize that Sub-Saharan Africa is not the region that pollutes the most, and that was the slide that I skipped. Sorry, if you want, we can bring it back. It's the region that pollutes the less, and it's the one that is most affected by climate change. So we do not. I mean, no one has an expectation of Sub-Saharan Africa cutting on emissions. This is why we talk not about climate mitigation for Sub-Saharan Africa, but climate adaptation. So the climate discourse is about finding sufficient resources for Sub-Saharan Africa to adapt to climate change. And this is what I've been talking about: build resilient infrastructure, reforestation, infrastructure that can survive floods, landslides, irrigation in agriculture. This is where Africa should invest now. And then, yes, all these other polluters have to pay more for what they're doing to us. Thanks. And there is a question there, I see.
Thank you very much for a very brilliant presentation. My first question is to find out if the slides will be made available to us, because
we'll share it in the end of actually, the organizer already has the slides.
Thank you. The data is so rich.
And the new regional economic outlook will be launched in, I think, around October 15, and you will see the report. It has much more numbers. This is a mix of our previous one and updated, so you'll have more to read.
Thank you. My second question is this. Yeah. In one of the slides, you showed that Ghana, its currency is one of the worst performing on the continent. I am from Africa Sureties and Insurance Advisory from Accra, Ghana. And most of the things you mentioned that government should do to remedy the situation, we believe our government there are doing it. School feeding, etc. They are doing some of those. But its currency is still the worst performing. My question is, from where you sit, what could be the cause of this? One. And two, do you think that country can recover?
Thank you. Thank you for the question. May I ask you what is your I mean, which company are you from?
My background is insurance.
Insurance, okay. Just because I'm trying to understand where you come from when you talk about worst performing currency. You see, with the currency, there are two sides to everything. You know, do you think that exchange rate depreciation is a sign of bad performance? Well, it depends where are you in the economy. It's good for exports. Your goods are cheaper, yeah? So I wouldn't see it necessarily as a sign of weakness. Sometimes exchange rate depreciation is a sign of a return to equilibrium when the currency is overvalued. I'm not acquainted with Ghana's situation, for instance, you know, but we would, for instance, in Uganda, the currency has appreciated by 7% since January, but we see that as a return to an equilibrium. It's not necessarily a bad thing. What may be problematic is that when you import a lot and when you import food, then your prices are affected by it. And that's where we need to think about all these channels of transmission and how to help the poor against these shocks. Okay, but overall, I think this is the main challenge. You know, what does it happen to prices in the economy? What is the pass-through? What is the share of your foreign debt? If the share of your foreign debt is very high, then your debt service become high. But it's not a clear cut. It's not a clear cut. So. Yes, sir.
You're very well acquainted with Ugandan. I just wanted to know if you consider something called parish development model that takes $30,000 to the lowest unit of government, about $100 million in a year. Do you consider that as good intervention to cushion the poor? Secondly, I want to hear your views about subsidizing fertilizer production plants and, government dealing with the removal of taxes and other things to increase production within countries to cushion agriculture.
Okay, from what I understand, the parish development model is not a social safety net instrument. This is a transfer to subnational government to boost productive agriculture. And it's targeted at subsistence households, not necessarily the poorest people in the country. So I don't see it as a social program. It's a program that can lift households out of poverty and help them implement some, for instance, by fertilizers and boost production, link them to the market. So overall, it is a program to boost productivity at subnational level. Now, your question on subsidies, fertilizer subsidies, whenever you go in the route of subsidies, you are distorting price signals. When you are facing real prices, you can make decisions around them. If one good is scarce, the price goes up, but then the production is redirected to produce more of it. Also, the subsidies can leak into other areas, exactly. So subsidies also discourage innovation. So we are generally not in favor of distorting prices. Price signals are there for us to internalize them and to react to them, and then find a way to help, to do policies to help, agriculture or poorer in other ways. But, some things are fine if they are temporarily used, maybe. Because, for instance, you had a huge drought, and then maybe the government has a bigger bargaining power and can obtain things at discounted prices from the neighboring country. That could be like a temporary solution, but really temporary. Yeah.
Okay. We have a question from online. Charles Hamia is asking, from an IMF standpoint, is Uganda at any risk of failing to pay its sovereign debt? And again, also, we'd like to ask that if ever you do have any questions, kindly just stipulate your name and your organization. So the question to you, Isabella, is from an IMF standpoint, is Uganda at any risk of failing to pay its sovereign debt?
The short answer is no. Our last assessment of that sustainability shows that Uganda is at moderate risk of that distress. This is up from the low risk of that distress that we were showing prior to the COVID-19 crisis. That assessment has, the debt has increased since then, but also the growth prospects of Uganda's partners are weaker now, and that affects our view of sustainability. And that has happened in many countries. Okay? As I was talking about how many countries are really at risk of high risk of that distress. This is a change that we have observed in the first year of the pandemic.
All right, I think we'll take the question in the corner, plus two more here, and then we'll break for lunch. Thank you.
Hello, my name is Chiamaka Okolo. I'm with the legal department, Afrieximbank. My question is about sovereign yields. You were mentioning that sovereign yields are going up in sub-Saharan Africa. And I was just wondering whether that's necessarily a bad thing. Is it a bad thing? Is it a good thing? If it's a bad thing, who is it a bad thing to, right? Is it the government? Is it the investors? And if it's a good thing, obviously the investors who have liquidity, but also, is it a good thing for the countries? Can they mop those bonds up? And how does that affect economic development? Just please shed more light on that.
So if everything, in the economy, there's always somebody who is losing when the other is gaining, It is a maybe favorable development in the short term for the banks. It's definitely very bad news for the governments. But all that, we are all connected. If the government is at high risk of that distress, the government will not be able to provide basic services. If that happens, if the government that is at high risk of distress, the banks then become overexposed to it. Then the banking system can fail. So it's certainly, the high yields are a reflection of increased risk, but they can also exacerbate risk vulnerabilities to the high cost of that.
Thank you very much. Good afternoon. My name is Temi Adeniro from Sahara Group. My question is, these incentives and these loans, Madam Speaker, can you shed more light on what IMF does to ensure that these funds are actually used for what it was made for?
Which fund specifically you're talking about?
Okay. Basically, we hear about IMF loans to governments and to countries. So if you can, share more light on what IMF does to ensure that these loans are actually not diverted.
Okay, good question. We do a lot of things. You and me can spend an hour over that. But exactly, the IMF lends against reforms. So we provide budget support. We provide financing to the government, not to the private sector, not for projects. We provide. And therefore, we are in a constant discussion with the government on how to use that money. And the money is lent against a set of measures that have to be implemented over the forthcoming year. And every 6 months, we provide one part of the disbursement against performance criteria that are set in advance. So we agreed on how is the money going to be spent. Then we come 6 months later and we look at the indicators and then the reforms. We make a decision, is this satisfactory? We send the report to the executive board. If the executive board is happy with it, there are a lot of people involved in that decision making, by the way. If the executive board approves, we make one tranche available. So when you hear, for instance, in Uganda, the IMF lends to the government $1 billion, well, it's 1 billion over 3 years. And it's tranche by tranche by tranche against reforms.
Okay.
Thanks.
I think we'll take the final question here.
Asogi Joy from National Financial Credit Bank, Cameroon. Sorry, I still have to come to the issue of subsidies. From the point of view of Cameroon, fuel, if not subsidized, is about 1,200 francs CFA. With the subsidies, it keeps it at about 630 francs CFA. And all of us know that fuel is at the center of distribution, and therefore, it plays a role in determining the price for the poor masses. So if you don't subsidize, prices of goods and services would definitely go up.
Yes.
And then affect the very poor masses you think you want to alleviate from poverty.
Yeah.
How then do you think that concept of not subsidies can work in Africa with those heavy prices that will affect the masses?
So we say, don't give subsidies, give them cash. Find the poor and give the poor cash. And maybe they will use the money for something else, maybe to pay for the school, maybe to pay for the fuel, for the transport, maybe for food. But we should not make these decisions on behalf of the poor. Now, the difficult part, so when we talk about weak social safety net, we say it's not easy to know who is the poorest because the databases are not strong. So some of these measures have to go hand in hand with strengthening the social safety net. But once you know who are the poor, it's much better to give them the money directly. Mobile money we have today.
Sorry, I have to get more clarification. If you make money available to the masses, then in Africa, all of us know that in terms of infrastructural development and the database for the poor masses, it's very difficult to determine. And how do you transfer this money to the poor? Physical cash. When you know that the mentality of a human being is no effort made to receive cash will be spent worthlessly. That's the African man mentality.
So, sorry, I'm not sure I understood the question.
Money that is not backed by effort will
Yes.
never be spent judiciously.
Will we not?
Will not be spent judiciously. That is the general mentality.
But who is the government to decide what the people need most?
Studies, it's not a matter of the government system, it is studies. If you make an inclusive dialogue with the population, they will determine to you what they think impact them more.
Okay. So you are basically saying the government should provide food subsidies to everyone, including the rich, because it cannot reach the poor. I'm just saying this is very costly because the rich are also eating the same food, you know. So there are better ways of doing that, and I think I think people can make a decision for themselves about what's most needed. Some people would sacrifice, would rather send their children to school than have fuel subsidies because they don't have a car. You know?
Okay. I think you two can probably sit next to each other during lunch
Yes, we can continue that.
And we can continue this discussion because we're not going to come to terms here. Let's take one last question and then we'll go for lunch.
Thank you. My name is Sunny Garg and I'm from Afrieximbank.
Sorry, I can't hear you well.
So I'm from Afrieximbank. My question to you, ma'am, is so IMF talks about fiscal consolidation whenever there is a loans that is being given by the IMF. But do you think it is counterproductive in the sense that it actually reduces the growth of the economy? For example, the same happened maybe in the case of Greece, for that matter. So whenever the fiscal reforms that IMF talks about, but it is counterproductive for the economy as a whole.
Yeah, I mean, unfortunately, the IMF lands only when countries are already in a desperate situation. So it's very difficult to move away from from consolidate. But actually, we come in a situation when the country is in such dire need of financing that in the absence of the IMF funds, it would have to cut even more. So you usually don't think of that. We're not there to maintain the same unsustainable path of finances, but to provide some financing and allow the country also to adjust and be independent from the financing from the fund. But the situation in sub-Saharan Africa today, I mean, you have seen just the debt levels are so high, and it's unfortunate that we are in a situation where just after the COVID-19 shock, we have a price shock, and we have to go through this on top of that. But there is just no other way, and the only thing is do it gradually, do it in a way to raise more domestic revenues in an equitable way. There are a lot of tax expenditures in many African countries. If they can be eliminated, the tax base will be wider. The countries can raise more revenues domestically and depend less on the external world and on foreign currency debt. So there are ways of doing it, but it is painful with or without the IMF.
Isabella, thank you very much for your presentation.
It was a pleasure. Thank you all. Thank you for your questions.
Amazing presentation. Just a point of interest, I think the discussion became very heated when somebody asked, should we really be giving subsidies? And I was privy to an organization called Give Directly. They did a launch in Uganda. And the story behind the organization is a very interesting one. There were a couple of students, I think they were from, I don't know if they're from Oxford or from a university from the United States. So they were studying in Kenya, and then they realized while they were doing their, I think it was their MBA, or one of their PhDs, they said, how can we impact communities? So they said, let's get some of our money together. And they got their money, and there's an innovation in East Africa called M-Commerce. So they have something called M-Pesa. So they said, this is how we're going to impact local communities. We're going to send this money out, and we're going to say, here, take this money and use it as you deem fit. Long story short, 5 years later, this organization has actually been funded to the tune of close to $890 million. They're about to scratch $1 billion. So what they've done is that they've come up with a system whereby they give money direct to the most needy. And they found something very shocking. Yes, money that is given when not any effort has been put into making it, you'd assume that people would spend it on drinking, happening, and you know what we like doing in the evenings. Okay, some of us like doing in the evenings, huh? Shockingly, they found out that 95% of the money that was being given was being used to better themselves financially. So what they used to do is that they wouldn't give it out at once. They would break it down into 2, probably sometimes 3 different disbursements. So I'll just challenge each of you. Check out the website. It's called Give Directly. And it challenges the status quo and how sometimes we think that, oh, it should only be governments that give. Sometimes if you go direct to the poor, the solutions can be right there in front of you. So ladies and gentlemen, we're going to take a a 1.5-hour lunch break. We would like to be back in the room by 2:45 o'clock. We'd like you to kindly walk down the steps. There's a nice tent. It is near the flag mast. There'll be ushers to direct you. We'd like to say bon appetit, and we'll see you right after lunch. Thank you.
Oyalık nözinevaz, seçti. Oyalık nözinevaz, seçti. On the
watching in slow motion in my
We'll be starting in the next minute or so.
I get the saddest thoughts for you and me. Memories of life and times goes on and on. Ooh, I try hard to forget. just wanna stop and say what I feel about you, babe. I just wanna stop and never wanna leave without you, babe. I just gotta stop for your love.
So we'd like to welcome everybody back from the lunch break. And something very interesting is that when you have lunch, they say that eating is a social thing. So I managed to rub shoulders with people from all over the continent, all over the world. So I just want to give a chance for people to give a shout out because we're all very proud of where we come from. I had lunch with a gentleman you're going to meet later on who is a citizen of the world. He was born in one country, now he's lived for 25 years in another country, and even had a terminology for that. So I spoke to a couple of gentlemen qui viennent du Cameroun, and on s'est parlé, and I told them, oh, j'ai passé du temps aussi au Cameroun. So I'd like to know which other countries do we have, and how do you greet? So where are you from, sir? From Ethiopia. Where in Ethiopia?
From Ethiopia, Addis Ababa.
Addis Ababa. So how do you greet in Ethiopia? If I want to say hello, how do you say hello?
Hello.
You guys, this is not a comedy show. Stop laughing, huh? How do you greet in salam? Okay, you can say salam, all right. So there. Anybody else? Anybody from a different country with a unique way of greeting? Which country are you from? Zimbabwe, yes. I had an ex-girlfriend from Zimbabwe, and I used to call her my Mambokatsi. That is my queen. Huh? So how do you greet in Zim? In Shona, I'm sure. Makadi. So Makadi, and how do you answer? Have you heard that? Because I'm not going to repeat it. Huh? Please pay attention. These things go once. And any other interesting countries? Anyone else? Huh? Where are you from? Malawi. Beautiful country. What language do you speak?
Chichewa.
Chichewa. Now, how do you greet in Chichewa?
Mulibwanji.
Mulibwanji. Here, that means that you are very many. Mulibanji. It means you guys are too many. Huh? You need to reduce your numbers. Huh? So if that's the greeting, how do you answer?
Tiribuino.
Iribuino. Tiribuino. Okay. Now, bueno here means that you're giving me undercover information. These languages are amazing. Anybody else? Which country is he from? Rwanda. Alors tu parles français? Or you speak Kinyarwanda? So how do you greet?
Muraho.
And how do you answer?
Muraho neza.
Have you guys heard? People say that Kinyarwanda is one of the most romantic languages. Is it true? Didn't I sound romantic? Yeah, we are here for trade finance, man. Let's focus. Let's focus on the main issues here. Which country are you from? Angola. So, tell me, Portuguese, right? So how do you greet? To Dubai. To Dubai. And then, to Dubai, yes? We are all going to Dubai. But I'm sure you've heard about the new constraints. If you're going to Dubai, you must have money, you must have guests. How do you answer?
Obrigado.
Obrigado. I hope you're taking notes. By the time we leave here, we'll understand trade financing and also languages. Yes?
DRC.
DRC, voilà. Alors, tu vas parler français or you're going to speak Congolese?
I'll speak Lingala.
Lingala,
Mbote na yo.
You hear that in songs, huh? So when you hear Mbote na yo, what do you say?
Same thing, Mbote.
Bote. Yeah? All right, a couple of other countries, some nice romantic destinations. Anywhere? Yes. Where are you from?
Ghana.
From Ghana. So what language do you speak?
Chi.
So how do you greet?
Etisane.
Atisei. Etisei.
Etisane.
And how do you answer?
Aya.
Aya. Any other countries? I don't want to miss anybody. We are equal opportunity communicators here. I don't want to say that Afrieximbank has missed my country. Where are you from? Comoros. Now you see, people have come from far and wide. Wow. So would you like to invite us to Comoros to come and relax? I hear it's one of the most romantic islands ever. Is it true?
Yes, of course.
So how do you greet?
Beriza.
Beriza, and how do you answer?
Njema.
Njema. All right. 2 more countries and we jump to the next part of the afternoon. Where are you from? Gambia. Amazing. Welcome.
Yes,
Nangadev.
We reply Jamarek.
Jamarek. Huh? Nangadev. All right. Final country. I've got 2 countries here that are struggling for last position. So what's your country? Liberia. Okay.
Hello.
Really? And you're going to tell me that the answer is hello.
I'm from India. And we say namaste. And in answer also we say namaste.
All right, namaste. All right, so we're together. So ladies and gentlemen, we've had lunch and now we are back. And the next individual I'd like to introduce is a born and bred banker. We were having a discussion and she was telling me, no, you see, in my previous life, she wanted to be just like me. And my story, yes, I'm a veterinary doctor, but I missed being a gynecologist by 0.1 points. That's not a laughing story. My heart was broken for some time, but you see, when God puts you on a path and you walk on it, then he opens other doors. Well, God opened her doors, and she ended up working in numerous banks over the last couple of, I was going to say decades, but I must maintain that all women in this room are 18 plus certain years of experience. So she's coming to tell us more about how Afrieximbank decided to respond during the challenges of COVID. So it's my great pleasure, ladies and gentlemen, to please welcome to the floor, please welcome Gwen Mwaba.
Well, good afternoon, everyone. I hope I'm tall enough for this podium. I'd first like to start by personally extending a very warm welcome to you all. It's great to be here again in person, connecting one-on-one. We've had 2 years where we couldn't do this. So thank you very much for taking the time out and being here to join us. So today, my presentation is a somewhat unconventional one. It's about a crisis that we've lived through before the Ukraine-Russia crisis. I think many of you in the room are either from the financial services sector or a related field. But when COVID came upon us, I think it took us all by surprise. I think it was November 2020, we started hearing about COVID in China. There were problems in China. Actually, it was called coronavirus in China. And slowly, that virus started to migrate to the rest of the world and eventually even got to Africa. So yes, we're bankers. We're used to talking about LIBOR, interest rate, loan facilities. All of a sudden, we had to adopt new language in our vocabulary as an everyday feature. Coronavirus. All of a sudden, we all knew what PPE was. COVID-19 was then coined, vaccines, and then, lo and behold, the pandemic. And I think our lives changed forever at that point. So my presentation is going to talk about where Africa was when the pandemic broke, the position we were in terms of the global landscape, and focusing specifically on vaccine equity and access to vaccines. So on this map, I just need to get this right to make sure, yes. So on the left, that was January 2021. By now, if you were following in the press, there were a number of vaccine candidates across the world in trials. And some of those vaccine candidates became successful and they obtained emergency use authorization. Everybody was excited. We were all waiting to receive vaccines, including here in Africa. But when you look at the map on the left, that was January 2021, the shaded areas in blue are the areas where they had started to see a trickle of vaccines. Look at Africa, it's stark and glaring. But I think at that point we were still comfortable. We thought, well, Australia doesn't have vaccines. A large chunk of South America doesn't have vaccines. The vaccines are coming. March on to March 2021, 3 months later, oh, look at what's happened. The rest of the world has received vaccines. Africa, oh, there's still a huge chunk that don't have vaccines. So we had to sit up and pay attention. What had happened was during the trials, there were many, many vaccine candidates. So the Western countries who had deep pockets, they had funded those trials. And for the benefit of funding those trials, they had agreed that any vaccine candidate that becomes emergency use authorized, they would have first right of refusal for the contracts. So we found that countries were buying quantities multiple times of their population. As an example, Canada had secured 10 times its population. And here we were in Africa with no access to vaccines. It didn't matter where you went. Our heads of state, ministers of health were going around speaking to vaccine manufacturers. And they weren't given the time of day. These manufacturers had huge contracts. They're not going to listen to a small country that only needs 2 million. So that was the position we were in, just to paint a picture. Now, whilst this vaccine story is developing, and also just to mention that you'll notice in my presentation that the timelines will be jumping a little bit. The reason for that is because all of these things were happening in parallel. So it wasn't like a linear line. So you might see me go from 2021 back to 2020, etc. But that's because all of these things were happening in parallel. So whilst we're waiting for vaccines, and I think at this point it had been announced that COVAX, which is part of the Gavi, it's a Gavi Alliance initiative, was going to make available vaccines to African countries. So just sit and wait. We've got donor funding. We'll give you vaccines. But the story didn't end on vaccines. PPE became very, very short in supply. I remember in March 2021, and this is not an exaggeration, a mask was costing $50 US, one mask. Again, our ministers of health tried to go and secure PPE. Manufacturers in China were saying, pay me 100% cash upfront, and I have a minimum order quantity. So the Afrieximbank, with its partners, the African Union, UNECA, which is the United Nations Economic for Africa, and Africa CDC created a digital platform. Actually, the platform had been in development. And this platform is called the African Medical Supplies Platform. And we thought, you know, because one, PPE is so expensive, you can't get ventilators, can't get masks, can't get gloves, why don't we use this platform to aggregate the needs of the African countries? So the African countries went on to AMSP, they logged their needs, we aggregated, so all of a sudden you had a huge quantity of gloves, and then AMSP would place the order with a supplier. So some PPE started to flow onto the continent that way, but still there was scarcity. So in the background, Afrieximbank started to offer, under a facility called the Pandemic Trade Impact Facility, we started to offer corporates that were willing to retool their factories, facilities, so that they could start manufacturing hand sanitizer, masks on the continent, because we just couldn't get it from outside. And if you could get it, it was either very expensive or the supply chains were so disrupted that the products wouldn't get to you. So that's on the PPE side and AMSP. So now we go back, and this is what I meant when I say I'm going to jump between dates. Meanwhile, in the background, I mentioned COVAX, which was an interesting story, because when COVAX made the announcement that they would provide free vaccines to qualifying African countries, they said, COVAX, by the way, is a global initiative. So they weren't just supplying vaccines to Africa, but also Western countries. Some were self-financed. But by and far, the majority of African countries were getting the vaccines free, or were supposed to get the vaccines free. But then the statistics from COVAX indicated that they had only allocated 5% to Africa, to cover 5% of Africa's population. So and meanwhile, the West had announced that in order to get to herd immunity, you needed to vaccinate at least 60% of your population. So when COVAX was challenged, why then are you only supplying or intend to supply only 5% of Africa's population? Does that mean Africa doesn't need to get to herd immunity? The response was, well, Africa has a youthful population, and we know that this disease is affecting the elderly. But after that challenge, COVAX revised their estimate, and they said, okay, look, we'll do 20%. But meanwhile, Africa's also got to get to 60% like the rest of the world. So thank you very much, COVAX, but we're still not going to have enough vaccines to reach herd immunity. And we need to react. By this time, the disease was raging in Europe. We all saw what happened in the news in the UK, in Italy, and other European countries. So at the time, the then president of the African Union, His Excellency Cyril Ramaphosa, who was also head of state of South Africa, he set up a task team within the AU called the Africa Vaccine Acquisition Task Team, AVAT, with 2 T's. And I'm emphasizing the 2 T's because you'll soon hear about another AVAT with 1 T. And basically the goal for AVAT was to put in place learning from the Africa Medical Supply Platform that I spoke about in the PPE, the goal of AVAT was to put in place a mechanism where Africa could pool their demand for vaccines. And the other objective of AVAT was to estimate how much money would be required to pay for these vaccines. And then lastly, to go out and actually source the vaccines. So that was the creation of the task teams. President Cyril Ramaphosa chaired this task team, and then eventually he delegated this responsibility to an Africa Union special envoy called Mr. Strive Masiyiwa. So that was then the beginning of the brainstorming, staying up late nights and trying to determine how are we going to solve this problem of getting Africa to 60% coverage. So in the early days, the AU commissioned a study through McKinsey to try and estimate. We didn't really have a lot of data to try and estimate the funding needs. And it was determined that we would need 9.1 billion in Africa to vaccinate 60% of the population, a combination of the cost of the vaccines plus the cost of actually vaccinating the population, paying for nurses, healthcare workers, providing them transportation, PPE, safety boxes for disposal of the vaccination vaccination syringes. So the question was, where was this money going to come from, $9.1 billion? So COVAX, who had estimated 20% of Africa's population, they put aside $1.8 billion. Then a few countries you saw on the map, there were a few countries shaded in blue. Those countries had managed to get some bilateral donations, and some were going to pay for small quantities. That was only $500,000. The World Bank announced a COVID response package for $12 billion. $4 billion of that was dedicated to Africa. When you do the maths, there was still a gap of $2.8 billion. So Africa was not going to achieve the goal of Africa CDC to get to 60% immunization. The problem was still there. So Afrieximbank was then co-opted into AVAT, and I'll give you a little bit more detail around the organizational framework of AVAT and why it was important that Afrieximbank be a part of the solution, otherwise the solution would not have worked. So there in the center, you have the Africa Vaccine Acquisition Task Team. Initially, it was a very big team from all over the continent, led by the coordinator, Mr. Strive Masiyiwa. But eventually, it shrunk because we were having meetings every day, every night, 7 days a week, brainstorming and trying to strategize how we would solve this problem. So eventually, it shrunk down to what we now call the AVAT principles. These are made up of Mr. Strive Masiyiwa, who's a telecoms entrepreneur and well-known African billionaire from Zimbabwe, based out of the UK. We then had the president of Afrieximbank, Professor Benedict Orama, who you heard from, you saw on stage unveiling the AfriCAD Academy. And we had the Undersecretary of UNECA, Dr. Vera Songwe, and the fourth principal was Dr. John Nkengasong, the head of Africa CDC. So these four leaders and their teams were tasked with trying to find a solution. And on the Afrieximbank side, I was part of that team and actually leading the technical team within Afrieximbank. And I've put up on the slide there the various roles of these technical teams. So Afrieximbank was basically the financial advisor to AVAT, but also the institution that would have to go and find that $2.8 billion that was needed to bridge the gap. Africa CDC was the clinical advisor to AVAT, helping with governance, such as advising countries on obtaining emergency use authorization so that the vaccines could be imported into the country. UNECA was advising on economic matters for AVAT, and of course we had the AMSP, which was providing the digital solution. So once that was established, the goal now was what does Afrieximbank need to do to make this work? Because you can't go and speak to a manufacturer if you don't have deep pockets and a side check. They just won't entertain you. That's how scarce the vaccines were. So, but before we sort of moved into the financing, we had to determine how would we interface with the suppliers. You've got 54 Afrieximbank member countries, and then you've got a supplier. At this point, we hadn't identified a supplier. The suppliers weren't interested in 54 contracts. So this is where the AVAT with 1T I spoke about was born, and we called it the Africa Vaccine Acquisition Trust. It was set up as a special purpose vehicle registered in Mauritius. And the whole idea was that AVAT, now I've moved on to AVAT with 1T for the rest of the presentation. AVAT would be the conduit that would interface between the 54 African governments and the supplier, so that the supplier negotiate with one entity rather than having 54 separate contracts. And then we used the AMSP to aggregate orders from the countries. So they went onto the platform, they told us what types of vaccines they needed and the quantity, and we started to aggregate these numbers using the AMSP. That having been done, AVAT it's just a special purpose vehicle. It's got no assets, it's got no staff. So actually, Afrieximbank provided the resources in terms of people and also the financing for AVAT. And secondly, AVAT also did not have the logistics capabilities to deliver these vaccines. So AVAT then contracted with UNICEF, who became the logistical partner and payments partner to get vaccines out. So now the structure and framework was grounded. We were able to start engaging suppliers, and we started speaking to many manufacturers to find one who would have interest in supplying Africa. So just a few of the manufacturers that we engaged with, we spoke to Pfizer. They were warm, but they weren't really committing to providing any supply. We spoke to Oxford AstraZeneca. They told us, well, for Africa, you need to go and talk to Serum Institute in India, who had been given the license to manufacture AstraZeneca under license, I think the brand name is Covishield. They said they were responsible for producing and supplying for the emerging markets. So we went to Serum Institute. Initially, they said they would give us 100 million. Spoke to Johnson & Johnson. They still didn't have the emergency use authorization, but they were close. Eventually, what happened, Serum Institute, because at this point, the virus had now started raging in India, and it was really, really bad. So there was an export ban on vaccines. So we couldn't get the 100 million that we were hoping to get. COVAX, which was the entity that was created to donate vaccines to Africa, all of their contracts were with Serum Institute. So the problem was just getting bigger and worse. Still no vaccines for the African continent. So Afrieximbank, in the meantime, we went to our board. We got credit approval for $2 billion, so that with that approval, we could issue a guarantee to a manufacturer. Otherwise, the manufacturers weren't talking to us. They're like, show us the money. We've got people queuing for these vaccines. And then at the same time, we realized that some countries would not have the financial resources to pay for the vaccines, even if we go and find the vaccines. So at the same time, we approved limits for every single country out of the 54, so that if they needed to fund the acquisition, we would stand behind them and give them the liquidity. And then what emerged also is the CARICOM, the Caribbean community, were in a very similar situation to Africa. They too had been completely forgotten. So we assumed them under our program. I don't know if you know this, but the CARICOM is unofficially considered the 56th state of Africa. So they're an extension of Africa. So we subsumed them in our program, and we had 6 CARICOM nations participating in the program. So we lost. Pfizer was not coming to the party, but warm. AstraZeneca, we couldn't get any vaccines out of India. Johnson & Johnson said, well, we can talk, but we haven't yet got emergency use authorization, and we haven't even started producing. So that basically sets the scene for AVAT. And again, AVAT, like AMSP, is a partnership of African Union, Afrieximbank, Africa CDC, and UNECA. And before I move on, just to show you, remember I spoke about us aggregating orders under the AMSP. This is what the map of Africa looked like in April 2021. This was the countries in red are countries which expressed no interest. They did not want to participate. They were going to wait for the free vaccines to come. And then you've got a few countries in amber. They had placed their orders, but they hadn't fulfilled all the regulatory requirements to be in a state of readiness to receive the vaccines. And then you only have about 10 countries in green, which were those that had confirmed orders and they had fulfilled all the delivery prerequisites. This wasn't good enough, but the good news is if you roll on to the map on the right, eventually our order book, if you can see, is actually covering 41 African countries. And for us, that was good. But we still don't have vaccines. This is just an order book. So following all of what I've said, history was made on the 28th of March, 2021. We signed a contract for Africa. Johnson & Johnson came to the party. They'd received their emergency use authorization. And they agreed to produce vaccines for Africa. They were the only manufacturer that came forward and stood by that commitment. But of course, they wouldn't have done so without the $2 billion guarantee that we were able to show them. So we signed a contract for 220 million vaccine doses on a committed basis. And we also built in there an option for an additional 180 million in case the demand was there, so that we could actually cover the entire 40%. So having secured the contract with Johnson & Johnson, we mapped out how the delivery schedule would look. So if you look in August 2021, because Johnson & Johnson had not started, they had to build new production facilities, first of all. So the production was very low, but it ramps up. So we'd mapped out that between August 2021 and September 2022, that's what the deliveries of vaccines to Africa would look like. And whilst all of that was going on, we also were speaking to donors. MasterCard Foundation very generously donated $500 million, which enabled us to give a portion of the vaccines at no cost to the countries, so effectively providing a subsidy. And MTN Foundation also provided 1.8 million doses, which was fantastic. So after a long wait, again, the second pivotal moment in history was when the AVAT vaccines eventually started to flow to the African countries. And I've just put up, in the middle, you can see all of the countries that were first to receive the AVAT vaccines, but I just selected a couple of random images. You can see the Minister of Finance of Ethiopia. Those of you, Dr. Leah, who are from Ethiopia, you'll recognize her. You can see Prof. Orama in Egypt receiving the first vaccines, Botswana, Mauritius, but basically all of those countries shaded in yellow. And what we did, because the production was so low still at that stage, we had to be equitable and give everybody just a couple of 100,000 to get started. And that's how Africa actually started receiving its first vaccines, and vaccination campaigns could begin. This is just a timeline to remind us of what I've spoken about so far. Started, and sorry, I can't see the screen, so I'm just going to turn around a little bit for a moment. Starting in November 2020, you remember the Africa Vaccine Acquisition Task Team was set up. And then by December 2020, it became apparent to the task team that if they didn't have a financing partner, no negotiation was going to come to fruition. So in February 2021, Afrieximbank stepped in, got that $2 billion approval to be used as a guarantee and also to fund the countries that needed funding. In March 2021, we signed the contract, and we then had to make a $330 million down payment for the manufacturer to actually start producing the first vaccine. And then, of course, August 2021, the deliveries commenced. And this process is ongoing. As at the last time, I think this is as at August, we had delivered around $67.4 million vaccines to Africa. Now, this presentation, I'm nearly coming to the close of my presentation, but what's the point of this presentation? This presentation was really to give you an appreciation of how sometimes, and I think this is something that we have to carry going forward, Africa and Africans have to step up and be the solutions to their own problems. If we sit and wait for the West to save us, we'll be dying in the process. And we were very fortunate that the impact of COVID on Africa was not as stark as it was elsewhere, but it could have been. So whilst we got COVID, the deaths were at much lower rates. So we had to stand up and show the rest of the world. And when we did this, my goodness, everybody started calling. The IMF was calling. World Bank was calling. That 12 billion package, they said, we want to work with you. You front it, we'll de-risk so that you can go and do more. Gavi came and said, let's form an alliance and do this together. So we really made the world stand up and for once acknowledge that Africa can stand up and work for itself. And I'll give you an example that is related to the financing. We, as a DFI, also raise liquidity from other DFIs and commercial banks, and in the syndicated loan market, we'll go to the bond market, the same way that many of you banks would raise liquidity from us and other financial institutions. At the height of COVID, some of the comments that were coming back from international banks, it just wasn't, oh, we're pulling out of Africa. Some of the banks, Western banks, were given specific instruction that if the use of funds is to buy COVID vaccines or to build a COVID manufacturing plant, we can't approve it because we need to secure our own people first. That was really stark for us and a real eye-opener. So in closing, what we then realized, having done all of this work, and this happened over a period of like 18 months of being very sleep deprived, we realized that actually we had built African institutions that will outlive the pandemic. So what those 4 AVAT principles I spoke about have created is a legacy that will outlive us all. And just to recap, first of all, the creation of the Africa Vaccine Acquisition Trust. Post the pandemic, this institution will continue to exist. We're in the process of recruiting a CEO for that institution, the idea being that even after COVID, they can expand their responses for Africa by making sure that Africa's health security is secured. They'll look at making sure that Africa has access to other medical therapeutics and health facilities. They'll identify opportunities for manufacturing of all manner of vaccines on the continent so that we become less dependent on the West going forward. So that institution will live well into the future. Now, something that I didn't speak about when it came to negotiations with the manufacturers of vaccines. Traditionally, when a vaccine goes into trials, it takes about 3 to 5 years of trials before it's released to the public. But the COVID situation was so critical that the vaccine manufacturers were rushed. That's why even the authorization that was granted by WHO was emergency use. But the manufacturer said, look, you deprived me of the time that I need to do trials properly. Nobody had the luxury of waiting 5 years for COVID vaccines. So the manufacturers weren't willing to take the liability. God forbid, if somebody suffers injury because of taking the vaccine, the manufacturers didn't want to be sued. So in every single manufacturer's contract, they put in a clause which said, we will only sell to your country if you have a no-fault compensation scheme. That was a big impediment for Africa. And that's why even those African governments that did have money and wanted to go out and buy vaccines, if they could find the vaccines, they couldn't fulfill that condition. So again, AVAT created the first ever no-fault compensation scheme. Never existed before on the African continent. It's an Africa-wide compensation scheme. And how that scheme is funded is we add 15 US cents to every vaccine for a double-dose vaccine, or 30 US cents for a single-dose vaccine, and those monies go into the fund. So I'm sure many or all of you are vaccinated. If you do suffer injury as a result of taking the vaccine, there's a fund there that will compensate that type of circumstance. So again, every single African country that participates in the program automatically opts into the no-fault compensation scheme. So even the governments at least won't be liable because there's a fund that is there to protect them. And the process is very easy. Even on a personal level, just go to avatclaims.com or .africa, and you will see the website, lots of information on the website. And then finally, of course, the African Medical Supplies Platform will continue to play its critical role of pooling Africa's medical procurements to ensure that Africa remains resilient well into the future. So ladies and gentlemen, that's the end of my presentation. I'll be happy to take questions. I guess it was crystal clear.
No, not that fast. People are still digesting. There's definitely one or two. You see, I knew there were questions. So if we could have somebody walking around with the other microphones so we can make more. Je vais revenir, mais je vais commencer avec l'autre gars là.
Thank you, Mitch. My name is Edgar from Bank of Uganda. Thank you very much for a very insightful presentation on the journey that we've taken in regard to resilience and health security for the continent. I'd like to hear from you about how much has been done in terms of ramping up collaborative work on the continent, especially for the financing. I think it came out very clearly that one of our biggest challenges was just mobilizing the funds. So into the future, if we are faced with, another health emergency of the kind, what's our capacity looking like? Is it going to be a case where we're still running around to struggle to put a guarantee together or to put funds together? How much have we done either through Afrieximbank or just mobilizing financial institutions across the continent to just solidify our position in terms of financing? Thank you.
Yeah, excellent question. And I mean, it is a reality that we live through. But I'll start by saying that fortunately for all the banks in the room, that kind of solutioning is exactly why a development finance institution such as Afrieximbank, Africa-focused, exists. Because what tends to happen in times of crisis is the Western banks are very, very quick to withdraw. So you will note that in part of the solutioning that we had during the pandemic, it was to ensure that there was no financing gap and no liquidity constraints on our partner banks. So our role really is the role of a lender. But I hear your question, it's, what can we collaborate more as African financial institutions? Now, I think the reality is the African financial institutions will never really be able to raise enough liquidity from the continent. You'll always need to depend, and that's why we have correspondent banks outside. So Afrieximbank is positioning itself as the trade finance bank for the continent to provide both funded and unfunded solutions. Now, obviously, Afrieximbank is not a bottomless pit, but we do have the ability to leverage foreign resources and attract those into the continent, which we then on-lend to African financial institutions. And even though I gave you the example of one institution where they had been instructed that if the funding was required for COVID vaccines or manufacturing we couldn't support, there were many other partners who came to the fore, and it was important to have those partners to keep the cost low, because in a pandemic you don't want pricing to be this high. So we work with several international collaborating partners, such as the European Investment Bank. I mentioned the World Bank. The World Bank have been amazing. I think out of the 43 countries that we have provided cover for, the World Bank is going to assume ultimately around 34 of those. So they're slowly assuming the risk and freeing us of that burden of that big $2 billion guarantee. they're taking it on as their approved projects for the country. So we have World Bank. We have KfW of Germany. We have AFD, and I must say the French, especially through their President Macron, he was very instrumental and vocal in supporting Africa, and I think his voice was one of the reasons why COVAX also raised their coverage ratio. Eventually, COVAX went from 20% to 30%, by the way. I didn't mention it. So by collaborating with these, and many of these partners that I've mentioned, actually also offered to provide liquidity to Afrieximbank so that we could keep the cost of our pandemic response to our African financial institutions low. But as we move forward and develop intra-African trade, I do believe that there is more depth for African financial institutions to collaborate. And there are a number of banks in the room who are actually Afrieximbank trade finance intermediaries. And they represent trade finance, Afrieximbank, and its work. So that is an example of a network of African financial institutions that can start to collaborate by sharing liquidity. I'll give you a very recent example in Ethiopia, actually, which has been impacted by the increase in oil prices. We support the oil flows into Ethiopia. The Ethiopia Petroleum Supply Enterprise, EPSE, imports all the petroleum for Ethiopia. So we provide lines to Ethiopian banks for them to be able to issue the LCs on behalf of EPSE. We provide confirmation to give the suppliers comfort. But what happened because of Ukraine-Russia, all of a sudden the price of oil went from $45 a barrel to $101 a barrel, meaning the same lines were no longer adequate. We increased our lines to Ethiopian banks to, I think, $750 million collectively. However, what we found is when one bank uses the capacity and that cargo, the limits are tied up with one cargo, the next cargo is required, the bank comes to us and they want to increase their limit, but we've maxed on our risk appetite. So what we said, we sat down with the CEOs of the Ethiopian banks and said, look, you've got 50% unutilized, you've got 20% unutilized, neither of you can fulfill a cargo. Why don't you collaborate? So you both finance that cargo. Just because it was awarded to Awash Bank as an example doesn't mean Hibrit can't issue an IRU so that together you now finance the cargo. There was a bit of pushback, but eventually that's the solution that is happening today. And Ethiopia has continued to import petroleum without necessarily having to have Afrieximbank or another DFI expand the limits, just by mopping up the unutilized limits. So I hope that that answers the question and that example of one way that African banks can collaborate. We do need to work together to create that capacity, because individually we may not be able to meet the quantum of the solution that's required, but collectively we can definitely come up with collective solutions.
Okay, thank you, Gwen. It's me again.
Will you speak English or French? Because I'm non-French speaking.
No, I speak in English.
Perfect,
no
thank
problem.
you,
Okay.
thank you.
Okay, thank you for your presentation. My question regarding the importance of COVID in the planification of the evolution of GDP of various countries. I discussed with my colleague a few times ago before this seminar. I told them that I see in the World Bank a projection of GDP, every country where the GDP is higher is the country where the rate of the vaccination is higher also. It's why I'm asking why this COVID now is important in the definition of GDP. This is why I need to ask you. Thank you.
No, I mean, great question. I mean, COVID has taught us so many things. One of the things that COVID has taught us is we do need to be vaccinated. Because the reality is, if you're not vaccinated, and I'm not trying to advocate or convert anybody to be vaccinated, but it's just the reality. Because if you're not vaccinated, and God forbid you get seriously ill, even if you're not seriously ill, you can't go out and be productive. You have to isolate yourself. So what happens in economies where the vaccination rates are low, more people, and the isolation period is 8 to 10 days, so you're basically losing productivity. And even in the poorest communities in Africa where people are living hand to mouth, where you need to go out on a daily basis to earn the wage to feed your family that day, if you have COVID, you cannot continue going around spreading it. But if you're vaccinated, even though they were hoping that vaccinations would stop transmission, vaccinations haven't stopped transmission, but at least they're preventing serious illness. And in some cases, if you're fully vaccinated, you may not even know that you've got COVID because you don't have any symptoms. So I think the correlation with COVID is because you have lower productivity because people are feeling unwell. They might not want to call it COVID. They'll say, I have a serious flu or I have a very bad headache, but they cannot go to work and be productive. And even if they do go to work, and they can be as productive because they're not feeling well. So my view is that's where the correlation is coming in. The countries that have higher vaccination rates, productivity, of course, has come back to where it was pre-COVID. I'm dying for more questions.
Hello. Hello, good afternoon to you. My name is Casey Tole from Zimbabwe. I wanted to ask, one of the questions is, in as much as you're mobilizing with the financial institutions, are you also planning to mobilize with the governments themselves? Because if you look at it, J&J is one of the COVID vaccines, but it's not one of the COVID vaccines listed for Zimbabwe. And yet one of the funders was Mr. Masiwa, who's also Zimbabwean. But we didn't have Johnson & Johnson as one of our vaccines. So the need to also mobilize with the governments, is that part of the plan for Afrieximbank? Thank you.
Thank you, Kay. Great question. You'll be interested to learn. Obviously, my COVID story that I've told you is a very, very summarized and abridged story. But you'll be interested to learn, Kay, that actually Zimbabwe is a participant in our program. Now, and actually Zimbabwe even paid their down payment contribution for their vaccines. But the country chose not to take the vaccines, and I think the reason was at that point they had already contracted with a couple of Chinese manufacturers. So it's not a case of they weren't involved. We collaborate with all of the African governments. And apart from the few that still remain in red, I think Eritrea, Libya, and one other, I think Somalia, all the other African countries are participating in the program, including Zimbabwe. And by the way, when you go back home, you can remind the Minister of Health that we still have their vaccines. They just need to tell us when they want us to deliver.
All right, I think let's take one more question and then we'll take two. One from there and then one from there.
Good afternoon. My name is Kevin from Zimbabwe. I got a lot of interest on the section beyond the pandemic. And I just wanted to appreciate whether, as Afrieximbank, you are looking at solutions that are proactive rather than reactive. When I was listening to the numbers, and you were talking billions of orders being made to vaccine manufacturers which are beyond Africa. And I was just saying to myself, are we then thinking of pulling those billions or even a quarter of it or a tenth of those billions to find proactive solutions to the various pandemics that we have? Africa battles with diseases like malaria, Ebola, HIV and AIDS, and so forth. And with the pulling skills that we have demonstrated in the pandemic in the shortest possible time to deal with the issues around vaccines, PPEs, surely I'm seeing an opportunity for pulling resources in the same fashion to come up with proactive solutions, even to things like drought, climate change, and so forth, rather than to then wait and react. Thank you.
Yeah, you're absolutely correct. And this is one of the greatest lessons, actually, that COVID has shown us, that we do need to prepare for the next pandemic, because there will be more, whether we like it or not, just in a different form. And the pandemics may not necessarily just be health. Already we're living through a potential food security crisis. So yes, absolutely, we have been proactive, And one of the things where AVAT was also very influential is through the negotiations, we insisted that Johnson & Johnson sets up a manufacturing plant on the African continent if they wanted our contract. And they did, even though they're only doing fill and finish, but it was a start there. For those of you from South Africa, there's a big pharma company called Aspen. That's where the J&J vaccines are manufactured, in South Africa. But obviously, we need to move to the next step, and these conversations continue. We don't want to just manufacture under license, under contract. We want to manufacture under license. So Aspen has already got a production facility where they stand ready, and I think they've already coined a name for the derivative of Johnson & Johnson that they will manufacture on the African continent. Beyond that, we've been speaking to the likes of Moderna, who have expressed interest in setting up vaccine manufacturing plants, not just for COVID, because it's not financially viable to just set up a plant for COVID. The plant needs to cater for other types of vaccines as well. So Moderna have shown interest in a couple of African countries. No commitments yet, but I know they've been looking at Nigeria, they've been looking at Rwanda, and possibly a couple of other countries. So you're absolutely right. One of the things we have to do on the manufacturing side is create that manufacturing capacity on the African continent. Not just speaking about COVID-19 vaccines, but all child immunization vaccines. Africa is the largest consumer of child immunization vaccines, and yet they're all manufactured outside the continent. Having said that, however, we're not blind to the challenges of the world. What we then found during this process of COVID is that between UNICEF and Gavi, they are the largest procurers of vaccines globally. So if we go and set up a manufacturing plant in Africa and we don't have offtake, if our African governments are buying from UNICEF and from Gavi or and other, that manufacturing plant will fail. So one of the conversations that is ongoing now is to try and now steer those international institutions that have built up capabilities over the years to, number one, start to transfer that capacity and knowledge to institutions such as AMSP. So those conversations are ongoing. And also in the short term, to give contracts to an African manufacturer so that what an African manufacturer produces can be taken up by UNICEF and then made available to African countries. So that's where we are in the conversation. So we are looking at it proactively, but unfortunately there are some real political obstacles that need to be overcome. And beyond that, Afrieximbank is also heavily involved in trying to stem medical tourism. The continent, I may get my statistics wrong, but I think the continent spends over $1.2 billion annually in medical tourism. This is people who are leaving Africa to go and seek medical treatment in India, in Europe, in the US. Why does that happen? Because we don't have adequate health facilities on the continent. So Afrieximbank is financing hospitals, both public and private, and public-private partnerships, and building specialist centers. Like I think in Ghana, there's a planned oncology center, there'll be eye specialists, hospitals, and treating various other non-communicable diseases so that those specialist skills, we're working with King's College Hospital London, who are our partner in implementing these health solutions on the continent, helping to design the hospitals, providing the specialists and even the training, so that that medical tourism can come back onto the African continent. So that's one of the steps through which, again, we are proactively, we've proactively taken to make sure that we can stem. And AVAT, when the CEO has been recruited and he's brought his team on board, that's one of the things they will be charged with delivering, is to make sure that we stem medical tourism, ramp up production capacity for vaccines and other medical therapeutics on the African continent.
Thank you very much. I'm called Shafin Ambobi, the CEO of Yuga Ford. I'd like to thank the bank for that initiative through corporate social responsibility that came in to save lives of bank customers, which also could have impacted on them negatively. I just wanted to find out what was the implications on the bottom line as far as this initiative is concerned. And then secondly, regarding the vaccines that were distributed, do we have figures for those that are unused up to now? And what is the value of those drugs that are unused and have expired?
Okay.
Thank you very much.
Thanks very much for another great question. So the initiative of AVAT, actually, apart from the vaccines that I mentioned, which were funded by MasterCard Foundation and MTN, those are the only ones that were given free because they were paid for by MasterCard and MTN. The rest of the vaccines are paid for by the countries themselves, so they are self-financed. Some countries pay from their own treasuries. Some countries come to Afrieximbank for us to provide the funding, or the World Bank to provide the funding for those vaccines. So they are self-financed. So in terms of impact on our own bottom line, there is no impact, negative impact, because it's a commercial contract. The countries, so AVAT entered into the contract, and then AVAT entered into 54 back-to-back contracts with each country. So each country committed to purchase those vaccines. And I mentioned that we worked with international funding partners who gave us very, very good pricing, so that whatever financing cost was associated to those who needed to be financed was kept very, very minimal. So in terms of Afrieximbank, no impact. You're right, your question around, we've delivered 67.4 million. There's another around 60 million still in process. And in process means that the country has accepted, because there's a whole process that I didn't explain. The country accepts a certain quantity for delivery based on cold chain capacity in the country. And then UNICEF arranges to pick up those vaccines and ship, or some are in transit. And then there are around 80 million vaccines out of the initial 220 that are yet to be delivered to the countries. Now, I'm sure the question is, why are there still 80 million vaccines when we were supposed to have finished delivering in September? What has happened is many of the countries now are facing a couple of challenges. One, cold chain capacity. They don't have enough storage. They have to ramp up the storage. In some countries, there's been outbreaks of childhood diseases like polio, measles, which have been prioritized, so that capacity that they had to store has had to be redirected. So, but we're holding the vaccine. The vaccines are all produced, and they're sitting in a Kuehne+Nagel warehouse in Belgium. The J&J, and apart from that, also in some countries there's been vaccine hesitancy, because people realize that this COVID in Africa is not very serious. You know, people got ill and they didn't die. So they have to ramp up vaccination campaigns. I know here in Uganda, when we spoke to the Ministry of Health, they said they'd extended the vaccination age, I think, down to 18 years old. And they had started more vaccination campaigns, and they have another campaign coming to do boosters. So they will take up all their vaccines by December. So because of these challenges that I explained around cold chain capacity, redirecting storage to elsewhere, and vaccine hesitancy, the countries, some have finished taking all their vaccines, but some countries came and said, look, I have these challenges. Can you extend my delivery schedule beyond September to, say, December? You know, some countries have said, can you extend it till June? Obviously, we have to go and renegotiate with the supplier for them, because it was contracted till September to take those vaccines. The good news is the Johnson & Johnson vaccine, if kept at minus 20 degrees, has a 2-year shelf life. So we don't have any vaccines that have expired or that will spoil. And what we've agreed with the manufacturer, where we have a delivery schedule for a country, because remember, Johnson & Johnson is still selling to other partners, they will keep swapping the vaccines so that that shelf life does not shorten. So let's say, for example, a country, the vaccines were produced in May, and a country only wants to take the balance in December, meaning your shelf life has now reduced to 18 months. J&J will swap for those who are taking immediately, so that the person that's taking December, their clock starts ticking from December. So even when they take them into the country and store them, they still have 2 years. I hope that was adequate. Perfect.
Yep. I think let's give a huge round of applause to Gwen Mwaba. Thank you very much, Gwen. Amazing presentation. I know we could have continued talking to you, but feel free. She's seated right at the front of the class, and you know all the smart people sit at the front of the class. So please feel free to tap her if you'd like. And afterwards, you know, we've got a cocktail later on. Just side by her, and you can have all sorts of conversations. I'd like to just take a couple of moments and thank our gold sponsor, to Wanda. Thank you so much for your support. Wando have done a great job for supporting us in this particular initiative. And we'd like to just give them a round of applause. Thank you so much. Putting together an event like this is very cost-intensive, time-intensive, human resource intensive. And speaking about human resource, our next individual is somebody whose background is in, well, legal practice. But, you know, when I was getting to know him, in fact, he told me, I don't want to do a normal presentation. And he said he wants to be more engaging. So let's put you on the spot. Tagba, how are you doing? Is your microphone on?
I think so.
Yeah, it is. So how have you been?
I'm fine, thanks. And you?
I'm good. Why don't you stand up and we just do a quick chit chat. So, story has it that you were born in Nigeria, but then you ended up moving to South Africa. So you came up with an interesting terminology. What did you call yourself?
We South Gerians.
South Gerians. Have you heard of South Gerians? South Gerians. So 25 years in South Africa, but born in Nigeria. But your story was even more interesting because you were into law, but you decided that you're going to finance your legal studies by painting.
Yeah.
So what's the story with that?
So I was a street artist. To finance my legal training over about 10 years in the British tradition, I paid my way through as a street artist.
Amazing, amazing stuff. So what are you going to be talking about? Compliance. What does the word compliance mean? You know, for me, who's a veterinary doctor, and I understood Gwen's presentation because that's my field, but yours, I have no idea. What the heck is compliance?
Compliance is doing what the regulations say. So you can do it in spirit and in truth, and you can do it as a tick box exercise.
Okay.
Depending on your philosophy.
Great. So, ladies and gentlemen, let's give a huge round of applause to Mr. Tagbo. There will be microphones around in the audience if you'd like to throw any questions. Feel free.
Awesome. So thank you very much, Dr. Meach, for your kind introduction. Good afternoon, colleagues, ladies and gentlemen, all protocols observed. Before I start, perhaps to just thank the organizers of this seminar for inviting me yet again. And also, you know, it was a shame that we couldn't host this for the past 2 years. But I also appreciate the efforts from the colleagues at Afrieximbank to ensure that Africa did get vaccines. So another round of applause for Gwen, please. Yes, it is indeed my pleasure to have the opportunity to share some thoughts on the area of trade-based money laundering and mitigating compliance risk in trade finance. As Dr. Meach has alluded, this session is designed to be somewhat insightful, interactive, and I hope that we're all going to have some fun. I'll take us through a short presentation. We'll get the opportunity to see a real-life case study, one that I'm sure that many of us are familiar with. I'd also like to invite contributions from colleagues to elicit information in terms of practices in your various jurisdictions and institutions. Please feel free to contribute candidly during this session. So my first exposure to money laundering happened when I was 6 years old. So in this instance, my mom had asked me to help her move her bag. And you know, as a curious Nigerian kid, I opened the bag and I saw a stash of money. So I helped myself to only one note. It was a 10 naira note. And at that time, probably had a value of about, say, about $100. So I get into school, and I couldn't wait for the break period. I take my friends to the talk shop and treat them to a good time, including this little girl that I used to have a crush on. And word got back to my class teacher that, I suddenly was a millionaire and I was spending all this money. So my class teacher placed me on detention till my mother came to fetch me. To cut a long story short, I got a serious hiding. When you get a hiding from a Nigerian mother, it looks like Nollywood, but trust me, your behind will tell you that this is real life. And from that young age, I learned 2 lessons. Lesson number 1, as a man, don't go goofing around in a woman's handbag with your own agenda. And number 2, managing the proceeds of crime, disguising the origin of the proceeds of that crime, moving it, and being able to utilize it is a big challenge. I discovered that at the age of 6. And this is one of the dilemmas that criminals face in terms of being able to move, disguise, and utilize the proceeds of crime. Now, a typical money laundering scheme has three layers. The first part is the placement phase. Then you have the layering, and then you have the integration phase. At the placement phase, money is introduced into the financial institution. During the layering phase, there's different transactions, institutions, jurisdictions, including shell corporations and secrecy jurisdictions where possible. The idea is to mingle and co-mingle the illicit funds with legitimate business or with the legitimate financial system. And then you have the integration phase where now that money is being withdrawn and utilized as legitimate funds. How many people have read the book Things Fall Apart? Show by raise of hands. Okay. Now this bird that you see on the screen is called a red kite. In many parts of southeastern Nigeria, the red kite is a serious delicacy. And the red kite is a character that Chinua Achebe used to describe what you would call maybe, just say, a criminal tendency, perhaps. And in the book Things Fall Apart, Chinua Achebe describes the red kite. He names it Eneke the bird. Is there anyone that remembers what Chinua Achebe said about Eneke the bird? All right. So Eneke the bird was asked the question, why are you always flying? And he said, since men have learned to shoot without missing their targets, I, Eneke the bird, have learned to fly without perching on a branch. This is the way criminals think. Remember, if you've read the book, The Mafia Manager by Capo X, criminals face lengthy jail terms should they make a mistake, sometimes even pay with their lives. As a result, they're very adept, very witty, very smart, extremely clever, very adaptable, constantly looking for loopholes in the system, looking for the gray areas in the system. Remember, criminals are not bound by constitutions. They're not bound by rules and regulations. They're there to make a buck. Even if they haven't gone to school, they're very witty, smart business people. And remember, they have the resources to pay for the best talent, to help them along the way. And paying for the best talent also includes bribes, big money bribes. If you've seen some of the films on Netflix about Pablo Escobar and similar mafian films, you would see that Pablo at every point in time has got a well filled with dollars to pay his way through. He needed to spend millions and millions of dollars on a weekly basis, on a daily basis, to safeguard his security, his drug routes, and his market. You see, the thing is this, historically, trade-based money laundering, trade wasn't seen as a huge risk for money laundering. But all that has changed. Why has all that changed? It's changed because there's been global advances in terms of dealing with cash, just what I call naked cash, just finding its way into the banking system. And as a result of that, criminals have started using trade and global trade infrastructure and systems as a means to disguise the proceeds of their crime and being able to move value. Please note what I'm saying, moving value, moving money, using trade transaction to legitimize the illicit origins of their proceeds and obscure the true origins of their illicit wealth. Criminals also use trade-based money laundering to circumvent sanctions, to evade taxes and custom duties, which is really for us in Africa a very sore spot, because it is estimated that Africa loses between 50 billion to about 90 billion, about over 3.7% of our GDP to illicit financial flows, to transfer pricing, trade mispricing, different practices aimed at avoiding and evading and minimizing tax, whether legitimately or otherwise. Criminals use trade-based money laundering to avoid capital controls and illegitimately claim tax incentives. So the question is why? Why is trade vulnerable to be exploited for the purposes of money laundering? Can I take a few contributions, please? Why do you think trade is vulnerable to being exploited by criminals? Yes, there's the lady here from Afrieximbank. Who's got the microphone? Is there someone else that wants to contribute? Please, can you give her the microphone? Is there someone there? Okay. Can I have another hand? Okay, please.
I think it's because some of it, or a lot of it, is documentary in nature. You don't necessarily have to see the goods before you pay the money. You have to rely on document, and persons or people or criminals can, doctor smartly or cleverly document.
100%. Thank you very much. You're very, very correct. Yes, can I have another contribution? All right, let's proceed in the interest of time. You see, the thing is this, is that the financial system has become more hostile to money launderers, and trade is being seen as an increasingly attractive option. 20 years ago, you could take a sack of money and just dump it into and most of the banks would just accept that. Now it is becoming much more complex and complicated, and as a result of that, criminals try to use the fact that, as my colleague said from Afriexim, that the manual documentation process creates that susceptibility. Now, if you look at the global trade volume, in 2001, you're looking at about 29 trillion US dollars. That's a lot of containers of goods that's moving, millions of containers of goods, moving from one jurisdiction to another. And that scale, the speed and complexity of global trade makes it difficult to spot illicit transactions. Now, one of the things that I want us to look at is, what does trade-based money laundering look like? Well, number one, most of it seems just like legitimate trading activities, so they're very difficult to detect. Now, the most popular techniques are like mispricing, where trade goods are invoiced above fair market value, sometimes submitting multiple invoices for the same transaction, over or understating the volume of goods traded, making up phantom shipments in instances where the goods don't even exist, and false description of goods. With no set prices for goods and with value varying based on quantity, quality, and other commercial considerations, detecting illicit trade is a real challenge, especially for custom authorities, law enforcement agencies, and banks. So we're going to have, shortly, we're going to have a short film case study. Who knows this gentleman that's handcuffed here? This is El Chapo Guzman. He's one of the biggest drug lords that the world has seen since the demise of Pablo Escobar from Colombia. El Chapo is from Mexico. I've decided to use this case study. Why? Because it's very interesting the way he perfected the art of trade-based money laundering by turning money into commodities. Number one, El Chapo's built a massive empire from what do you call marijuana here in Uganda? In Johannesburg, it's called the Zoe. In Nigeria, it's called an SK. In America, they call it the trees sometimes. Now he turned a marijuana running business from Mexico to US into a massive, massive business that involved cocaine and other illicit drugs, and built a massive, massive empire, taking over a lot of the remnants of what was left behind after the demise of Pablo Escobar. But El Chapo had a problem. His biggest market was in the United States. So he's got all this money, the proceeds of the drug trade that's stuck in the US. He can't get the money into US banks. He's got to get the money into the banking system somehow. And he's perfected the art of trade-based money laundering. And what we'll do is let's just take a look at that film. It's a short film. And after that film, while you're watching the film, I want us to reflect and see, in Africa, do we have similar scenarios? And please, we would like to hear from you.
LA's fashion district in the heart of downtown Los Angeles is a fashion lover's paradise. Almost 5,000 different fashion lines sold by wholesalers here to retailers visiting from around the world. Millions of dollars in cash and merchandise changing hands every day. Seemingly everywhere you look, merchants shipping out boxes and packages of clothes and accessories for export. Everybody on their smartphones, everybody blending in, driving expensive cars and living large. Money everywhere. The perfect place at Mexico's Sinaloa drug cartel to set up one of the largest money laundering operations the world has ever seen. The perfect cover for sending proceeds from U.S. drug sales back south to Mexico. Just how much drug money are we talking about? According to a recent U.S. government study, American drug users from coast to coast consume $100 billion worth of illegal narcotics every year. Until recently, the main U.S. supplier has been Sinaloa cartel drug boss Chapo Guzman, until he got caught. Hunted down in his home state of Sinaloa, Mexico. His arrest making international headlines and likened to taking down U.S. gangster Al Capone, says one of America's most respected federal drug agents, Jack Riley, number 3 in charge at the U.S. Drug Enforcement Administration, the DEA.
Well, anytime you take what's, in my opinion, one of the leading criminals in the world off the set in terms of capturing and taking him away from his criminal empire, you see tremendous damage at all levels of the organization.
Still, despite Guzman's arrest, there's no definitive evidence that fewer drug loads are crossing into the United States. Though Guzman's capture, say authorities, has led to considerable chaos inside the Sinaloa cartel.
And when that happens, they make mistakes.
George 5.
It was in Los Angeles not long after Guzman's arrest when 1,000 federal agents raided a number of wholesale clothing stores in the city's famous fashion district, where the Sinaloa cartel is alleged to have been operating an elaborate money laundering scheme. Federal agents confiscating $90 million in drug money, so-called dirty money, much of it in bulk cash, that the cartel was allegedly laundering by using it to buy wholesale clothing here in Los Angeles that would then be packaged and shipped to and resold down in Mexico, with the revenue from those sales funneled back to the cartel through what's known on the streets as a black market peso exchange, says Los Angeles DEA agent Vijay Rathi.
What the black market peso exchange essentially involves is the cartels in Mexico will have sold drugs in the United States. That results in a large amount of bulk cash here in the United States. In order to get the dollar equivalent back down to Mexico, the cartels will hire an individual that's known as a peso broker. That peso broker will make an arrangement between a business in Mexico who needs goods and a business in the United States who would be willing to ship those goods.
Agent Rathi says the cartel's previous method of hand-carrying or driving cash across the border became too risky after the Mexican government passed tighter money laundering regulations with Mexican banks in 2010.
Prior to the government of Mexico's money laundering regulations, it was relatively simple. Cash would be driven south across the Mexican border and deposited into banks. However, with the new regulations, that became much more difficult because reporting was now required. So the cartel shifted to a new method that had actually been around for quite some time. It had not been utilized so much in the Los Angeles area.
In one unique money laundering case here in Los Angeles, authorities say $140,000 was brought here to buy maternity clothes at this store called QT Maternity. But the cash wasn't from the sales of drugs. Rather, it was a ransom payment of $140,000 to the Sinaloa cartel for the release of a Mexican-American man held captive in Mexico after he'd lost 100 kilos of cocaine he was supposed to distribute for the cartel. The ransom was paid through QT Maternity, and the man was lucky enough to be...
Awesome, thanks. I think what I find very interesting about El Chapo Guzman's and the Sinaloa cartel's methodology is that while sitting with all this cash in America, what they did was find a peso broker. That peso broker would find businesses in Mexico that wanted goods from America, and also source businesses in America that were willing to export goods. And then they will use El Chapo's money, the funds that are stuck in America for the Sinaloa cartel, and use it to fund the export of those goods. Now, when those goods are now exported to Mexico and sold in Mexico, that money is now integrated into the banking system as legitimate funds from commerce. This is an interesting methodology of trade-based money laundering. Do we have such practices going on here in Africa? Hey or day? Guys, come on. Do we have such practices going on in Africa?
Hello.
Please, can you give this gentleman a microphone, please?
There's someone here.
Okay, please. Yes.
Yeah.
My name is Johnson.
Yes,
I think we do have such cases in Africa, especially right now where we're in the fintech. Someone does not have to go to China to purchase products. I can just give an agent here, transfer $100 million, whatever amount, say $1 million to purchase product here. Then the agent in China pays on my behalf. Then product is shipped. It's a case of money laundering if there is no product actually being shipped.
Yeah. Very true. Yeah. Very true. Very true. There's someone, I saw someone at the back also raising their hand.
Yes.
Okay, yes, sir.
No, I was just saying we may not be able to confirm that due to unavailability of tangible evidences. But if you look at the way the money transfers are operating nowadays, you can definitely assume that there is some illicit trading that is going on. Because sometimes most of the remittance proceeds does not come to the country. Instead, they transfer directly to other part of the world.
Interesting.
Yes.
Did anyone ever hear a rumor or read an article about the Somalian pirates in the Indian Ocean and what they did with all that ransom money? Did you ever hear anything in the grapevine? How did the Somalian pirates, how did they deal or manage all that ransom money they were collecting from the piracy activities in the Indian Ocean? Did you ever hear that they were involved in the chat trade? Do you want to contribute something? Okay. Did you ever hear about their involvement in the chat trade?
Yeah, I think on the trade, I heard also have an example in Cameroon for Boko Haram, where there's some in one city where people are trade half dollars and euros. They're trying to be on the trade. So, but I don't know where is the money coming from.
Interesting. Well, I did hear, yes, please, can you give her a microphone?
Thank you. I have 2 points to make. One is in relation to the first question you asked, whether we know if these practices are ongoing in Africa.
Sure.
I had said we wouldn't know, but personally, when I'm walking through some malls, there are shops that you don't see people in. Like every time you're in malls, when you go into those shops, things are so expensive, and when you look at what they are selling, they don't seem so valuable. And every time you're in malls, you don't see people in there. So what just comes to my head usually is this is a money laundry shop. Because I don't see people go in and go out all the time. And they are, when you go in, they don't rush you to say, oh, what do you want to buy? They don't look like they're looking for customers, if that makes sense. But that's a speculation. Someone needs to prove that. But that's what my head does when I see all that. Then the second point is in relation to the Somalia. I understand that there's this business where, I don't know if the Somalians, but some East Africans are in some countries where you need a local currency in another country. For instance, you're in Cairo, you're from Nigeria, or you need Naira, and you have dollars, or you have Naira and you need dollars, right? So you tend to hear the Somalians, they're in different countries, giving you those monies and taking the equivalent of those monies in whatever country, that either you have the equivalent or they have the equivalent. I don't know if that makes sense. But this is sort of a huge informal
That's the word. Informal,
or, I don't know, currency transfer business that is ongoing that I've noticed. So, but I hear Somalians are into it a lot. So perhaps it has something to do with moving whatever money they are making through piracy.
Interesting. So we always have that informal parallel market. They call it the parallel market. Some say it's the black market. I don't know why they call it the black market. But it's a parallel market of some sort, and its informal nature makes it very fluid, and with very interesting, as you mentioned, very interesting networks across the continent and across the globe. Yes, sir.
Yes, this is just rumors. I want to confirm that we don't know, we don't have proof. But when you see in a country, high rises are going up without going through the banking system. And
Thank you very much.
Where they're getting the money from.
Exactly.
And they build quickly, not in good quality.
Yes.
They resell, and then they have money can go out to the banking system with justification of having an asset being sold.
Exactly. I also had, one time I came to, Nairobi. I hadn't been there for about a couple of years, and then I'm in Nairobi, and suddenly I can't recognize anything. All my landmarks are gone. There's high-rise everywhere. And I'm asking, oh, goodness, what's going on? And I heard informally that, that some of the Somali Indian Ocean piracy money was being used to buy what do you call chat. Do you know what chat is? Chat is some kind of stimulant that you chew. And it's very popular in East Africa and the Horn of Africa. And so they would use the money to buy chat and then bring back the chat to take the chat to other jurisdictions, but use that trade to disguise, move, and use resources. And some of that money I heard, well, I've seen it in a few reports, but I think a lot of them require perhaps a little bit more research and tangible figures. But I heard that there was that was a huge injection boost into the real estate market in Nairobi. Is there anyone else that wants to make a contribution?
Yes, I think
there's a gentleman there.
There's a question here afterwards.
Yes.
Hello. Thanks, Tagbo. My name is Edmond. I work with Afrieximbank. Just a slight twist to your question. I think the question shouldn't be if this sort of illicit activities happen or go through our financial system, as it were. I think the conversation would rather be our financial institutions in Africa equipped to dictate these sort of, should I say, transactions, as you call them. Because typically, as you see, if you look at the African landscape, most of the jurisdictions across board, one of the things that you see that is quite prevalent is the fact that the approach to anti-money laundering, the general approach to compliance, it's not really driven by organizational culture, but largely driven by regulatory compliance. So you call it, at times you have instances where they call it, should I say, people just comply for the sake of compliance, but in actual sense, they don't actually commit the right level of resources or attention to proactively dictate or mitigate this type of events. Thank you.
Thank you very much for that conversation. Obviously, I have to play the devil's advocate. You see, but thank you very much for that piece. And I think that takes us to the litmus test of what this session is all about. The gentleman raised the question, are African banks, our African financial institutions equipped to be able to deal with illicit transactions of this nature that seek to take advantage of our trade finance products to hide the nefarious activities and the proceeds of their crime. And this brings me to what is the role of banks in this regard? But I wanted to start with some of the key challenges that banks face. My colleague here on my left did talk about some of the challenges because of documentation and so on. But I think one thing that is important to notice is that there are many consequences to having ineffective controls for a bank or for a financial institution. One is that their products could then be utilized to facilitate money laundering or terrorist financing. They could make themselves vulnerable to regulatory penalties, and we're seeing very, very stiff penalties being handed out to defaulting banks. I mean, a lot of the big banks across the world have actually have had their fingers burnt in the recent past. Reputational damage, which could also include the risking of correspondent banking relationships. One of the challenges that banks face is limited information. The reality is that with the exception of the importer and the exporter, no one party in any trade activity has a complete view of the transaction. And my colleague talked about issues around documentation, and sometimes you have, in the layering phase of money laundering, you have different financial institutions that have been used to mingle and commingle those funds, different companies, different jurisdictions. So at the end of the day, it's not easy for one entity alone to be able to spot any irregularity with respect to such transactions. Also, banks do not have the opportunity to actually physically inspect the goods or containers. Some banks think that trade-based money laundering risk is too great, and they decide not to prioritize offering trade finance products, which then has a very negative effect on other legitimate trade activities. Financial institutions that are engaged in trade need to be particularly vigilant to implement effective trade-based money laundering specific control frameworks to protect their institutions from being used by illicit actors. And in this regard, they require to have certain risk-based controls, including a robust customer due diligence process to ensure that banks know their customers and their expected business transaction patterns. This also includes knowing the source of the wealth. Surveillance and other control measures designed to identify and investigate suspicious transactions, potential red flags, or key risk indicators. This is important to better identify and categorize higher risk customers. Also, we can't underestimate the requirement for banks to invest and prioritize training and awareness programs for employees involved in processing trade finance transactions. Yes. It's also important for banks to apply the lessons that they got from fighting cash-based money laundering to better understand illicit trade. Using automated surveillance is one of the key anti-money laundering controls for cash that has been effective, but only to a certain extent, because it cannot be a fully automated process. It's important for banks to harness risk-based intelligence that brings together comprehensive customer knowledge, transaction information, and other meaningful risk factors. In this regard, I mean, like a product like one of the colleagues from Afriexim in an earlier presentation had highlighted an initiative by Afriexim called MANSA, which is a due diligence repository. You know, those kind of initiatives, those kind of opportunities for information and sharing of information is absolutely important. It's also critical for banks to take advantage of innovative technology that's available now, including artificial intelligence, to be able to mainstream that as part of their risk-based approach to fighting money laundering within their system. And in terms of, and part of that risk management process involves sort of like having an enterprise-wide risk and governance system that supports the philosophy of the bank in terms of being able to deal with money laundering and trade-based money laundering. This is very important because, number one, you need to have certain structures that are effective, certain structures, processes, and systems. Like, for instance, the role of the board, the role of the audit committee, the role of the risk committee to set the risk appetite, define the philosophy of the bank, and be able to set the right tone at the top that reverberates throughout the organization. Thank you very much. In the interest of time, this is... So we still got a few minutes, so we can take a few questions, or if you have experiences you'd like to share, please. Dr. Mitch, do we still have time?
We are tight on time, but I think you've seen that you designed your presentation to make it very interesting.
Thank you very much. Okay, so can we take 2 questions or comments?
I think we can. There was a question there, there's one here, and then probably we'd like to finish with his.
Awesome. All right. So who's going first?
Miriam. I'm Miriam from Equity Bank.
Okay.
About compliance and money laundering, I wanted to know whether, because we are talking about trade finance, but what if, because I've seen a lot of cryptocurrency or people investing in stocks. I think we have cheaper cash where people can buy stocks in other companies. I don't know whether Afrieximbank is involved in that. And I've also seen, or I think it can be used as a medium of money laundering. because in my field, I'm in treasury, where I see an individual says they are importing goods, and as my colleague was saying, you see the capacity is not up to $1 million in a day, but then a trader is buying $1 million in one day. So how can banks mitigate that, or how can they shield themselves against that?
So you're asking how can banks mitigate? Sorry, ma'am.
About the cryptocurrency.
Okay.
In situations where we are not trading in goods or containers across borders.
Okay. All right. Let's take the other questions.
All right. I am Taku Eyong, Legal for Leases and Co. Mine wasn't going to be outright a question, but rather it was looking at compliance, legality, trade, and the reason of existence of Afrieximbank. Now, we've looked at money laundering at its worst, but what of money laundering where it's not about a drug dealer, it's not about the extreme. One of the problems we face that you asked before is about trade. Why is there always money laundering in trade? Because trade always creates a demand. Where there is a demand and there is urgency, there is always availability to either pay fast or cut round corners. Which brings us to the very essence of Afrieximbank itself, which is putting Africa where we are the producers. If we can produce, we can control the sources with our legislations. We can consequently control the buyers. We are not producing. Let's take the case of Cameroon. Cameroon needs certain commodities, whether we like it or not. Somebody is going to order 6 containers of merchandise that is coming out from China. Everybody wants to welcome it because we need those merchandise in the first place. He's going to sell them without it making it look like money laundering in any form. He's going to bring back that money clean. The fact remains that the start of the money laundering is beyond our control because it's in China. We can't even control it. Part of the answer to our question is giving a big hand of applause to Afrieximbank and follow suit that Africa is put within the premise of production, of productivity. That will help us solve a lot of problems and add to it the compliance.
Thank you very much for that contribution. Was there one last question?
I think there was one last one.
Here.
Okay.
Mine is not a question, it's kind of fiction. It was triggered by the video you showed on El Chapo Guzman. That's some of the most interesting things you'll ever watch on TV. So, if anyone has watched Ozark, who has watched Ozark? Yeah, it's about money laundering. So, there is this scene where John Abad, who's the son of the money laundering kingpin, Matty Bird. There's this scene where in class, he's asked to sign some kind of bond in school to denounce drugs. And John Abad comes up with this alternative fact, if I may say. John Abad tells the teacher that drug money is actually not that bad. And his defense was that in 2008, when the global financial markets collapsed, it's drug money that actually bailed all of us out. The teacher was unable to defend against that. So my question, which is just food of thought, in the interest of time, we can complete this at the dinner. As a lawyer, what would your defense be against that? Money laundering is not that bad.
I can illustrate with, I will not quote name, but correspondent banks are coming every year to visit you, to ask you about your system, how many compliance do you have, the type of suspicious transaction you do, the interaction with your FIU. But you cannot do this if you don't have the right system. And today, with the panel of the choice of product that Afriexim is putting on the platform, we need to then say, to avoid the transfer of risk from the financial institution to our platform, let's imaginate a support for them to be able to mitigate the risk at their level before they come to our platform, or before they find a new correspondent bank. Because I'm sure that some of you have been de-risked because they don't have system. And I know today that several of my customers don't have the right system. So either I de-risk you because I don't want to take the risk to, I can say, pollute Afrieximbank platform. I need to protect Afrieximbank platform because we are, after having taken the single dollar from you, we are giving it to one of the correspondent bank, either in the US or in Europe. And those entities have trust on Afrieximbank platform. We have invested more than $1 million in our platform, compliance platform. So we then think that we need to help. We are giving you loans to finance trade. We then coming to say we need to give loans to banks to invest in compliance system. We call this facility the Afrieximbank Compliance System Financing Facility, which is having conversation with you, identifying your needs, and see how we can support on implementing or acquiring or improving the current system you have. Because we strongly believe that in order to help my colleague Gwen to give you more money, more facilities, we need to secure your platform. If your platform is not secure from a control compliance point of view, not only you are carrying a risk, but you are transferring the risk to Afrieximbank if it is about Afriexim you are working with, or any other correspondent bank. And that's the reason why Western correspondent banks are fleeing. They don't have the means to spend time or to really understand the risk you are carrying. So we want to have two levels of controls. First level, the bank, sanction screening, transaction monitoring, KYC. And then once you do that filtering, not only you share your KYC with eventually in our platform Mansa, so that we help our SMEs and corporates to be visible out of the continent, but also to make the information the most accurate possible to have access to other potential financing opportunities from any investors. But we prove to the world that we master our domain, that we know our customers, that we understand the transaction they do, and we can challenge them. So if this facility comes to you and you invest, then we have two layers of control. And nobody will come after to say Africa is a market that we don't understand, because there is no regulation or because the level of controls is too weak to accept that risk. So we are then, I can say with this, coming out with or finding a mitigation to the de-risking phenomenon. We, the product itself is quite simple. I mean, I don't want to insist on the loan facility. Everybody know when you want to loan, what to do, but we'll get to that. But we are coming with a platform of products and opportunities. We have Mansa, we have PAPS, But we need to protect those platforms. We have products like AFPay, AFTRAFT. As a head of compliance of Afriexim, today we do those monitoring, and we will more and more be stringent on the transaction you will pass to us. Because ultimately, I have the duty to protect this organization. We need to protect Afrieximbank platform. Because you don't know, I mean, I haven't seen any organization being committed to its own underlying financial institution. And to help, to give power to trade, we must start with compliance. And unfortunately, realizing that your own organization don't have enough budget or haven't seen it that important enough to invest, we are coming with this facility so that not only you leverage from our product, but also you tied up again with your correspondent bank. How this product works is very simple. Let's say I'm coming to this, sorry, we want our financial institution to have ability to do sanction screening against the list, be it international list or your local list, because every country has today a list of corporates or physical person that we don't want to, we need to sanction, we need to stop transaction with. And then we want you to improve your level of KYC. We want to help you to do risk monitoring, transaction monitoring. So there are so many systems in the market which can help you. And I know that some of you have system already. We're speaking with some compliance team, but when we challenge them, we realize that the system they have is not appropriate for the type of business they want. So with time, there is a risk that some institutions are going to be de-risked by Afrieximbank. Because we cannot take the risk or the chance to carry your own risk. We will not do that. And then we're coming with this facility for you to assess your situation and come see us to say, I'm in a need of a system, or I'm in a need to improve my system. This is what I need for. And we are ready to give between $200 to $1 million to an entity to improve, depending on the size, obviously. We're ready the facility is about that, for you to invest, for you to mitigate your risk. And we think that that's the minimum investment we have to do to not only protect your platform, but also protect our platform. Because ultimately, the rating of Afrieximbank can be jeopardized by the transaction we are carrying. And all of us know how sensitive is, in a minute you can lose your credit. So we are coming with this solution to really help you to improve your compliance framework, to improve your ability to challenge your customers, and then to have ability to talk to us, to talk to any other correspondent bank, and improve your trade flows, etc. So that's why I say initially, we're here for trade, but we need to accept and recognize that this would not start before having a very, very strong compliance framework. We have visited few countries these past months, and the feedback from central banks, banking association is quite positive, because they realize that this is a platform or this is an opportunity for financial institutions who do not have which do not have the budget to leverage from us and then improve its compliance framework, which is one, good for the country, good for the organization itself, and good for the continent, and ultimately good for trade. So that's why we then, we came with this proposition, I would say, facility to say, we need to help our financial institution improve their compliance framework. The facility will follow our credit process. Obviously, I will not bother you about how it's going to work, but it is about how, if you are eligible, the type of collateral you are ready to put on the table to benefit from the facility, and the source of repayment. So we will not discuss this. I will let this conversation with my credit colleagues, but the most important for you is to know that this facility is about to be deployed by early next year, and we expect that conversation will happen between compliance team first, because I'm the one privileged to be the first point of entrance of Afrieximbank. When a request comes, when a transaction comes, every time my team filters, and every time my team challenges, and you must have feedback from our back office team which are in charge of asking questions. So I will limit my speech here because I know that some people want to go to have a cocktail. So would like to stop my speech here and take questions eventually. Thank you very much.
Thank you very much, Mr. Diop, I think this is one of the most important presentations at this seminar.
You say it to my president tomorrow.
My question is this. You spoke about de-risking, and you spoke about correspondent banks moving out of Africa. You spoke about sometimes not writing certain businesses because we don't fully understand the operation. My background is insurance-based risk management. In the entire presentation, I didn't hear you talk about the trade finance intermediary. In insurance in Africa, in fact, intermediaries control about 60% of the insurance business. And this, if you're talking about trade finance, and you have systems, fantastic systems, but I can't really see the role of intermediaries at all. Does it mean that when it comes to this kind of transactions, they are not needed? I might be very naive to this, but that's what I see.
Thank you very much. Obviously, my presentation was not meant to go through detail, but today, as a compliance officer benefiting or using or leveraging from a very complex control platform, I am able to identify all the stakeholders of a trade transaction. So I hope that I have answered your question, and those entities are screened, and those entities are understood, and those entities are eventually rejected if necessary. But I cannot do this second guessing I'm doing this because I have system which help me to do that. So that's why we are coming with this solution. We cannot do compliance without technology. And today, we want all of us to embrace technology to promote trade. Thank you.
Okay, I think let's have that one here, and then we'll close off with these two.
Thank you. Thank you. My name is Farai from Zimbabwe. I'm just inquiring what Afrieximbank is currently doing to assist institutions in acquiring these systems and platforms. $1 million is not cheap for most banks, so we would want to hear your initiatives to make sure that you enlighten the burden on the banks to make sure that everyone comes on board. Thank you.
Okay, let's get all the questions, so Idrissa, that you answer them at once.
Hello, good afternoon. I'm James Butey from Bloomberg Africa, Gambia Limited. I'm going to play the devil's advocate here, and I look at two extremes. One is Nigeria. You know, if I understood your presentation very well, where everybody was being de-risked, it looked like Nigeria was actually going up. With everything that we know that's going on in Nigeria, how did that happen? That's question number one. Question number two is, I look at the other end, a smaller country like Gambia, my country, right? When you're doing I don't know if I should call it too much of it, but if you're doing too much of controls, wouldn't that encourage the black market? Because it looks like, especially taking an example between Gambia and Senegal, it's because Gambia is not allowed to work in CFA, the currency, it's Senegalese currency, and the Umo region, everything goes underground. The black market operates. So would your system not make more people go underground or black market? Those are the two questions I have.
Okay. I think we have one last question, Idrissa, and then you can close it up for us.
Merci. Je pense que c'est plus une contribution, pas une question en fait. J'étais en train de t'écouter et je me suis rendu compte que les préoccupations de Afriexim ont été déjà adressées par la BEAC avec la mise en place d'une réglementation des champs depuis 2019 qui a vraiment mis en place un système de contrôle de tout ce qui entre, tout ce qui sort. Au-delà du travail simple de la Banque centrale, maintenant, on demande le KYC jusqu'à l'acte de naissance des actionnaires, des bénéficiaires. Et actuellement, le contrat entre les shippers et le bénéficiaire sur le Bill of Lending est obligatoire afin de pouvoir valider un transfert. Cela a beaucoup contribué pour réduire quand même les sorties des devises. Et je pense que c'est quelque chose qu'il faille au niveau d'Afrieximbank qu'on continue à encourager pour pouvoir mieux protéger le trade en Afrique. Merci.
Très bien, merci.
Alors, je pense qu'on peut commencer avec la contribution.
Oui.
Tu traduis en anglais, and then you proceed.
Okay, he just said that what I was discussing earlier to say we need to be able to understand the nature of the transaction, the stakeholders, who is the beneficial owner, who is the seller, who is the buyer. The central bank of the Central Africa, we call it BEAC, Central Bank of how do you say BEAC? Bank. Voilà. So the Central Bank of Central Africa has already embedded this into its regulation. But I, from experience, know that this kind of requirement is already requested by majority of our central banks. Now, when it's cascaded down to procedure, that's where the issue is. Because banks, and it touch based to what my Gambian brother has just said, you are making people flee to go to the black market because you are asking too much question. So we need to put into balance between getting the risk and letting the black market die by its own, because people will realize that black market cannot solve everything. So I'm not convinced, and I did have this conversation, I was last week in Burundi, and we ended up agreeing that we need to ask the right question. Because as an institution, some are coming to say, yes, but the competition is letting the customer go. But just be patient. The competition is one day be sanctioned by central bank, and one day wake up without correspondent banks. So if we don't accept to all play the game of compliance, we must then link it with our lack of success in terms of profitability, in terms of making trade grow for our continent, for the country first, and ultimately for our continent. And as an institution, we need to be focused and be very candid about it. If you don't do compliance the right way, your correspondent bank would not deal with you. Okay, you will do wahala sending money to another person, but it's not a big scale. It's going to be very limited. So to me, I'm ready to have this conversation during the cocktail, but we should not be shy about, and it's a question of education. We need to educate our customers about why we are asking this and why giving information and clear information will help them to grow their business, to have access to several markets, to the world, actually. But it's just because we have the peer pressure, because some institutions are taking that risk. It's not our appetite. Our appetite today, as a trade bank for Africa, is to bring everyone in the right sense, which is having platforms like Mansa, where clarity information is provided not only to Africa, but to the world. This is what is going to make investors come back and trust our information. Compliance is today our bread and butter if you are a financial institution. Central banks are promoting it locally, and when you go outside, you will find the same constraint. So I just want to convince you that even though Senegal and Gambia are doing that small trade, it's really a big chunk of the cake we are talking about. I hope that I answered the question.
Idrissa, I think you're a rock star. Let's give him a huge round of applause.
Thank you very much. Bye.
Ladies and gentlemen, Mr. Idrissa Diop, Director Compliance from Afrieximbank. All right, so I'd like you to give yourselves a huge round of applause. Day one is down. Yep. In fact, you can already send a email to all your bosses that, yes, we have achieved our objectives for day one. Can I come home now? But before we close off the day, I'd like to quickly just say a special thank you to all of our silver sponsors. We'd like to say a very special thank you to NMB Bank, to Bono Energy, and to Stanbic Bank Uganda. Let's give them a round of applause, and we thank them all for their support. But again, also, we'd like to thank all of you, and we'd like to invite you to a cocktail, and in particular Ugandan fashion. I'd like you all to be there from 6 o'clock. It's right down near the infinity pool. So on the screen, we're going to put a map for those of you who don't want to get lost. It's a huge hotel. Just head down to the infinity pool. From where we are now, you just go straight down. Just ask somebody from the hotel. But that's at 6 o'clock, so we've got like 40 minutes to go. Feel free to pick up a coffee on your way out. And tomorrow morning, we'll be starting at 9 o'clock sharp. So whatever happens tonight, let it end tonight, and we are back bright and early tomorrow morning. All right, thank you very much, and round of applause. We'll see you tomorrow.